Okay. Hopefully my voice isn't low because it does sound like it's not like low, like deep, but like I sound far away, kind of. But it'll do. All right. Let's go over the trades we took and we called out, and then I'll go over what I saw and why I took them. All right. Let's go for the past. And then after that, I'll answer any questions and I'll look over any type of ticker that you want me to. All right.
Okay.
Let's see. Which one do
Well,
I
can
want
you hear
to take? Yeah, I can hear you.
Okay, perfect. I think I got my internet messed up.
All right, let's start off with Amazon because that one did work out. We did predict the price, except that the premiums maybe we should have had more time. But we're gonna go over Amazon, and what I'm gonna do is do this instead. Yeah, that way we can look at two things and go a little bit
Amazon,
faster.
yeah, Amazon did get that. We did predict the direction and it went there though. Good
Mm-hmm.
stuff on that, decent.
Yeah. So I'm gonna do everything from the beginning. Like I'm gonna do everything from the beginning, even AMD, right? Everything. So it's a blank canvas. We're gonna look at nothing but plain candles, and then we add our indicators. Okay. Okay. So I mean, you could do.
I guess
You can
that's
start off anyway once you already have everything. Like if you want to trade exactly like I do, or have the same stuff like I do, you could kind of once you get the screen time and get the experience, you'll see everything that I kind of see when taking a trade. So I always start off looking at the longer time frames, like on the daily. Um, we're gonna put up Amazon on the left. Let me go ahead and delete all these drawings on it, and I'm gonna put on the right another trade that we took, which was let's see here. Let's go with AI. AI, because AI was a little bit different than other ones, but it did end up working perfectly. All right. So what I'm gonna do first is do my TA, right? And I always look at the wicks, always first. So for example, right here, and this wick right here, and this one right here, and I'll go back whenever I called it out and when I entered.
EC. Can
Yep.
you hear me?
Yeah, I can hear you.
Yeah. People are allowed to I know you're recording, but are people allowed to ask questions or do you just want them to to put it on the chat or how do you want to do about that?
Yeah, I mean, you can ask questions along the way, and then I'll go over the tickers you want me to look at.
Okay. All right. Appreciate it.
I
Is
think
this from today's chat? Today's talk?
no, not today's
Yeah,
trades.
he's going over Amazon.
Yeah, I'm gonna go over for like some from last week, and then some from this week, and then some for or all of them for today that I took that I called out.
And yeah, so he's pretty much telling you why what triggered him to get into that call or put or whatever um entry he got pretty much.
Yeah, so
So
I'm not gonna look at the other. I'm looking back at when I called it and when I entered, and why. So I'm just gonna do. You won't see me post like the other levels like on the wicks. Like this one would be important. This one and the low of today. I'm only gonna put the one that gave me the trigger. Like my trigger was this one. This was the trigger to go long. The high of Thursday of last week. And our PT was this. So this is how I had it before this candle happened. 22456. And I don't have the magnet. I know some people might look at my video and probably say, "Why don't you use the magnet?" I just don't. I like doing everything manually. I want to know that I'm getting it to the exact penny. And sometimes, for some reason, on TradingView,
Penny.
when you go to a different time frame, it's gonna show like a different high. I don't know why, but it shouldn't matter that much because it's gonna be only like maybe 5 pennies off max, maybe like three for the most part. AI. Let's see. AI. I called it out on October 3rd. So after it
You caught
happened,
AI on the live, or you put it on your chat?
I put it on my channel.
Oh, okay.
Hmm. Do y'all prefer for me to have two side by side or go or just have it one?
Me, just because I mean, like, there's some new people still on this chat. I would say if we can just do one,
One at a time.
so it can be easier to read. Yeah, I appreciate it.
Okay, then I just go over Amazon
What
first.
about having the premium chart on there?
These ones weren't premiums reads as much as ARM was, and I can go over ARM because that one's just a beautiful example. Remember we were on something like that before. I think it was an AMD one. Remember that one day? I think you're the one who
AMD,
mentioned it
yeah,
too.
yeah, yeah.
But this
That was
one,
beautiful. That was beautiful.
mhm. So Amazon, all right? Amazon, I called it out on October 2nd. So this date, which was on Thursday. So my trigger, I have the wick, right? I already have the wick, which is 222.81. 222.81. And I'm looking at the 3 minute as well to see if it'll like close above it. But I was looking at it already. So even though it didn't go up higher that same day, you see how it went. Actually, it was this trigger right here. There we go. That trigger. 222.60. That was the real trigger. Now that I remember, I was already watching that. Once it gave me that trigger on Thursday, it made me be more. What's the word I'm looking for? Like it gave me confirmation that it was gonna go higher. What's that specific word? Conviction. It gave me more conviction to my already theory of it going up, or the possibility of going up. Let's go look at my entry as well. Give me 1 second. I'm gonna pull up my. When I entered exactly. Okay, I wrote it at 12:15 p.m. But I got in at 12:14, right? Because it takes me a little bit of time to write it. But we have our trigger here. I'm gonna go to the 3 minute. I always go to the 3 minute.
So when do you use the 5 minute?
Right after I get a body candle close. So for example, once I have my trigger right, because it's been consolidating, so we know on the small time frames you can see this consolidation, right? I always look for some type of consolidation on any trade I take for the most part. Like that's one of the main things I always look for. So remember that consolidation is gonna be number one that I look for. Okay, and then since we do look at the wicks, that's common sense. You just want to look at like wicks that are more prominent. Like for example, let me go back to daily before we get going, because that's the number one thing is having our levels right. The wicks. Like if you have too many wicks, like here, right? There's 1, 2, 3 days, right? I'm not gonna ride every single wick. That's too many levels, right? That's too many right there. Too many. See, there's just too many right here, right? So it's kind of like that around this area there's a lot of resistance. It's a big wall, so you want to hit basically the other side of the wall, because once you actually get through a wall, once you go through the first one and then the other side of the wall, right? That's when you finally get through. That's when you finally have a breakthrough. So for me, that's why I use the highest point of this wick right here, not these other ones, if it makes any sense. So that's
Yeah,
why I have that,
it make good sense.
right? Okay, so I have that. That's the wick. Then I go to the 3. I'm looking at the 3 to see if I have a body candle close, and that was on right here. So we got our trigger, right? Let's pretend I had a trigger there. So we did get a body candle close on the 3, right? So then I go to the 5, and I can stay on the 5 on this chart because I already got it. So we did get also a 5. So I just go ahead and give time just in case, right? I know that it finally broke through this previous high and then this previous high on this day. So it broke through 2 highs, right? And multiple other days. So you know that it's probably gonna maybe go higher. And we knew that there's a consolidation. And another thing, right, is that the MACD right here was showing some slow movement to the downside and possible movement back to the upside, right? Momentum to the upside. You want to see for those divergencies, and I'll go over that in a little bit. But for now, we're just looking at the price and the trigger, right? And consolidation. So we know there's a consolidation, right? And you can see it more clearly. You can see it on the 1 hour, right? Consolidation. We're in a range. That's what a consolidation to me is. So go to the 3. There is a body candle close on the 3. Right here. Then I go to the 5, right? So I just go ahead and get time, because I'm already reading everything else. With the whole market is going up. It's one of the Magnificent 7. It makes up most of the market, the tech, right? So on this day, I get in at 12:14, and the trigger gave it to me at right here at 12:10. 12:10. 12:10. So I actually waited a little bit. I actually got in on this red candle, right at 2:14. So I'm looking for the candle body close. Then I'm looking for this, like a red, like or something. Sometimes I just go in because it could go. Usually I just go in when it's like a weekly trade. But I know that Amazon moves slow. So you also gotta have kind of like a little bit of experience when things go slow or fast, or what tickers I should say go fast and slow. And we all know that Amazon moves kind of slow now after the split, right? So I call out this week's, because this was last week, right? So it comes down a little bit. We go a little bit negative. Boom. We wait. We hold it all the way till the next day. It gaps up, right? We got our trigger. It gives us a high probability of a gap up or higher upside. This is our next PT. Remember this? We have our trigger, and where'd it go? There it is. We have our trigger, and this is our PT, right? I'll go over why I like these type of movements And I'll show you on AMD when I called out that trade idea on it. I didn't take it myself, but it was a good trade idea. This is a big move. Usually, whenever, like, for the example, this day, right, which was yesterday on Amazon, we actually closed above this PT, which gave it a higher probability of going here once we broke it. It actually almost did it yesterday. Today, it opens pretty close to where it closed, sells off, comes down to retest this area, the first trigger to go long it, right? That's interesting, right? So it came down to retest and then it starts going back up. And it finally hits this next PT, which is what I told Elusive earlier. It's 227.86 earlier, and I already have it there. That's the high. That's the wick. There's a little mini wick right there, but you can't really see it that well. The next PT is gonna be this, the high of this candle, and there is a little bit of a gap there. So I color code my gaps. That way I know that there's a gap, just in case I don't have it colored in. So the high of this one is 230.57, and the close of this is 231.48. And I'll explain how I get the gaps in a little bit, or I can go over it right now. The gap is always from the most recent high or low, and then to the previous day's close. Okay, so for example, this is the high and this is the close, the previous day's close, so that's where the gap is, right? Another example would be here on this one. Since this one's a gap above, this is a gap down below that we did go down and fill here, and it bounced. And I'll show you, this is where we closed, right? The previous days, remember, close. A gap gets formed from the previous day. So on this day it closed at 225.99, and it gaps up to here.
And, can the gap only form from previous days to the next day?
Yes, I mean it is possible intraday when they halt a ticker based on volatility,
Okay.
but
Okay.
usually those are like penny stocks or something like that that's going on crazy. You know, those are more risky trades, I guess you could say. But on this day it closed here, and then it opens here, right? That's the open. But the low is what matters. Remember I said the most recent low on that one. So open, low. That's the gap on that day. This is what it should have looked like on your TA. Like so. And look, we came down, we filled it basically, and what happens after that? We bounce. Right? So gaps are very, very important, or at least the levels where they begin. And also 50%. This is where most reversals happen. You can see here how it had trouble here at 50% as well. So that's how you get a gap. So for example, on this one that we have right now, it's to the upside, right? It's right here. Because it closed on this day and then it gapped below that close, so that's where it ends. So now this wants to go there and it's gonna have trouble there. It just naturally does that. I can't explain to you how it happens or why it happens. It just for some reason naturally always does. So now we know our gap above, that's where it's gonna go more than likely. And if it does go higher, then it can go to the top of this consolidation, because this is a consolidation up here, right? That's a consolidation. Price was in here for quite a bit between this low and this high. So you could go to this wick or even this. Remember, I said earlier that if there's too many wicks closed, this one doesn't matter to me, because we have a higher wick here and a higher wick, or higher price and higher price. So you could put this one, you can plot this one on the graph, or and also this one. So the high of this one is going to be 235.90, and the high of this one is going to be 234.30. Okay. So this is how I had all my TA for the most part on Amazon. I had my trigger here, right? This was my trigger. This was my PT. After this is my next PT. This did not exist. So this level that so this is what my levels look like on Amazon.
Would you be able to explain a little bit what the TA and the PT are?
TA is just technical analysis. So this is my TA.
Okay.
Yeah,
Okay.
and
The
PT
PT.
PT it means price target and profit take. Like your first PT
Okay.
could be your first profit take as well, because you're going to
Okay.
this level or this level, so you want to trim here and then get fully out of here or whatever, right? Whatever you're happy with your gains, because that's what it all comes down to is psychology as well. It can go there. Are you gonna hold it to there, or are you gonna trim along the way, get money out the market, because it might reverse at any given point, which it did on yesterday. It should have gone here yesterday, but it didn't. It actually went to this high, and then it came down, right? So, and this level does
Sure.
matter a
Thank you.
little bit, but you can do this. You can do that. Yesterday's high, because remember the main PT is this one, and this is also an algo, and I'll go over that afterwards. What an algo level is. I just call it an algo level. I don't know if that's exactly what it is or what, but I came up with that.
The algos are
Twos and
the
eights.
twos and the eights,
Yep.
and then
And
the psych levels are the fives and zeros.
exactly. There you go. Yep. And psychological levels is just, I named it like that, and I think everybody names it like that. I don't know because I don't really, the way that I trade is just me from my own experience. Every now and then I do look at up to somebody and see how maybe they trade, or I take what their idea is into consideration. But I always back test it and see if they're like consistent traders, because I want to learn from actual consistent traders or people that actually give out good ideas. That's who you want to follow. And psychological level is psychological. Like 100 is one, right? That's a big level one, and then zero is another one. So 1 0, 5 is 50% of something. It's a half, right? And 25 is another one. It has a five in it, and it has an algo, a two and a five, right? That's why there's quarters. That's why I always either cut it in half, the gaps or the consolidations, or I do cut them into fours, like a quarter, 25, 50, 75, and 100, and I go by that as well, like 50%, 25%, 75%, like that. So we got our trigger. We went in. We waited a little bit to get in on this day right here. This is the day that we got in. All right, we got our candle body close. The reason why I didn't take no weeklies is because, like I said, I already know Amazon moves slow. So I wanted to get time, and I wanted for a gap up, and we did, right? We got our trigger, and look at this probability. We predicted that it was possibly gonna go higher, maybe even gap up. Boom, we got a gap up. This was the close, and this was the open. So it gapped up. And this is a perfect example of what I mean by the gap levels, right? You can clearly see that you have your gap, right? You could have done this. Obviously, I don't do it at the open because I can see it with my eyes. But, if you want, you could go ahead and do it from the previous day. Like, for example, today we closed on Amazon up here. So I could already have it like this, drawn out, that closing level, in case it gaps down or it gaps up. That way I already know, you can do that. But you can clearly see here visually that and we went up, we gapped up, and we came down to the closing price, or where the gap closes. And what does it do immediately? Bounces, comes down again, bounces again. See how important these levels are? A gap level is so important, right? You can clearly see it here. Once you lose it, it comes down to retest it, and it keeps on going down. So you could have taken a trade here to the downside based just on the gaps, right? But I don't just trade the gaps like that. I pair it with everything, right? Like I might be looking at the MACD, I might be looking at the volume, you know. So for example, here we're going down. The MACD is at the zero, so it's not quite ready yet to short. Once it gets under this, I'm looking at the MACD. It's under the zero, so that's two things already that give you a higher probability of a trade, right? And so the first thing is it's under the gap level. The MACD is under the zero. That means momentum to the downside could pick up. You got your confirmation that we broke under that level. candle body close on the 3, you can go to the 5, right? You also got a 5-minute body candle close, boom, it keeps going down. That worked out perfectly on that day, right? You could have also the 20 EMA. It kept right in the 20 EMA. It's under the 20 EMA right here. So it's a good, that's a number 3, right? That you could add to the way that I trade. So it's like a checklist. As long as you have like at least minimum of 3 plus, you have a high probability trade on a day trade, right? You could have definitely traded the weeklies in the monies on something like Amazon. Amazon, you kind of want to get close to the money unless you got a lot of time and unless you're expecting a really volatile move in order for you to make money on those further out.
It was very very slow.
Mm-hmm.
But before Amazon had a stock split, Amazon used to move. But after a stock split, stocks tend to move up slower
Yep, yep,
than they used to.
yep.
Also, like in what's it called, Chipotle, CMG.
Mm-hmm. Yep. And another thing when you're looking at when you notice a gap, most of the time they come down and fill that gap within that same day or the same week. After that, it can take, whoever knows how long. It could take months, years. So usually they do come back down to retest it or at least 50%, right? If I were to cut this in half, look how 50%, let's take this level out. Let's just only focus on the gap. Because gaps are one of the main things I look at to trade. Look at that, 50%, right? That's where most reversals happen. So we go down there, bounces already immediately. It doesn't close. Once it closes under, it goes down and fills it completely. Once it fills it, it bounces, comes down, bounces again. Look at where the gap was, the opening, right? The open. Doesn't get any higher, right? And look at 50% goes, it stays under below the lower half. It's getting weaker. The MACD's, there's a bearish divergence a little bit. Just because there's a bearish divergence like this and price is flat, it doesn't mean that it's going to go lower, because this MACD could have crossed and this could have been a bull flag. That's a bull flag, That's a bull flag. It could have gone up and we would have hit our PT that day. But this is another example on the premiums, which is more advanced trading. On when it gapped up, we should have been up like at least 10% or at least 5%. But when it gapped up with this week's expiration, from last week, we shouldn't have been up only 1 to 2%. That was the max that we were up. So I immediately should have known on this day that maybe I should get out. I held it and gave it time. Once I should have seen this breakage of this level, I should have just cut it. But no, I gave it time and I ended up selling it, and I got out for a loss on this one. This one was a loss. And good thing I did, because it just kept messing around, right? And then we got back in 2 days later. So we got out on this day for a loss on this week's, and then this day passes. It comes down to retest again. The bottom of the range, right? Mega sell-off. You can see it on the daily and on the smaller time frames. And I was like, man, good thing we did get out of it, because it continued lower on this day, and it could have gone way lower too. It could have gone to this low right here. And there is a gap down there, right? This is the gap right here. That's the close, and this is the bottom of this. So this is the gap, like that. And you can have this like this. This is the only exception where you can have levels like this, right? Because once you get this gap fill and then you have this bottom, that bottom one is the next most important level where it could bounce. So this is a gap down below here, right? So once it broke, like let's say if it didn't hold this level here, it could have gone lower. The level is actually this wick right here, the bottom of this, which is 216.47. Okay. So there's a gap here. We sell here for a loss. It did go lower. Good thing we did, right? If we would have had enough time, maybe I would have kept on holding, but we didn't. We only had this week's, right? And we got in on a what was it? Thursday, right? Thursday. So, and I'll show you my entry right here in my average. So I'll post it on main chat so you can see my timing right after that trigger. Well, about 5 minutes after the trigger, because I do, sometimes give it a little bit of time every now and then. So there it is. I got limit at 138, got filled at 12:14. So, so we were correct though. But the premiums, right? Options is the only type of trading where you could be right and still lose money because of theta, right? And that's more advanced trading to learn the Greeks. We're right now we're just looking at the levels, but the main things for the Greeks is gonna be delta and theta. That's about it. Everything else is a little bit more complicated. It involves more math for you to calculate on your own. You could use a calculator online as well to help you kind of predict how much you could make, or you could do it yourself based on delta and theta. You subtract the theta and you add what the expected move is. You multiply that. So if it's like, I'll go over it in a little bit so you can understand it better. But that's basically all I look at. It's I keep it pretty dumb, you know. So we were right on Amazon, but sadly our premiums didn't go up, and we ended up losing because it kept going down, and it just kept going down. Then we finally get back in, but on a lotto this time, because I'm telling myself, if I get back on Amazon, it's gonna be a lotto, and it's not gonna be a lot of money, because I don't want to get caught up in theta where it just kills my premiums, and I have to keep on waiting until it moves. So I'm only gonna risk a little bit where I'm comfortable losing, and if it goes, then I make either 50% or 100%. And usually a lotto to me is up to $100 to $200. And there was a little bit of speculation on Amazon because it did have a catalyst this week, which was Prime Day, right?
Yeah, I had Prime Day on Tuesday.
Yeah, so that's why I said lotto, because I could have made an extra $200 with just 100, or an extra $400 with just $200. It could have been 100, 200%, or who knows, right? Based on the IV, the volatility, if we would have gapped up and just gone straight up, right? But it didn't. It's just been going up slowly. The next day it goes down, then it goes up again, then it goes down, then it goes up again. Right? Like today it went lower, right? Then where it closed, and then it went back up. So, but always pay attention to price action. So, for example, the first trigger on Amazon, you could have got in today if you were watching it, right? Because some people I like to stick to one trade at a time. Me, I usually move on. If it doesn't work, I move on to the next one. And if I do have a position on it, like this one for example is a lotto, so I'm not worried about it because I can go to zero. I don't care if it goes to zero that much. But you can not let it go to zero. You could sometimes I say expect zero, but don't let it go to zero, right? Because you can still get some money out of it. Let's say you're down 50%. At least you can get, like, let's say you put in $100. At least you can get $50. You know, that extra $50 could help you out on another trade, right?
You're talking about lottos, or you're talking about regular trade?
Yeah, lotto and a regular trade. Yeah.
I mean, yeah, lottos. I always tell people lottos you expect to go to zero, either be a zero or be a hero.
Yeah.
I mean, on a lotto, but on a regular trade, you don't want to let it get. You never want to let it get to zero. Never.
Yeah, yeah, and
No.
at least try to get out at like 20 to 30% max on a regular, if you have a really high conviction. This one, like I said, I held it a little bit too long, and I think I sold for like 50 to 55% negative. So I should have just
Yeah,
covered
you
that
never
at
want
30%.
you never want to let your winner turn into a loser. That's like the most
Mhm.
annoying thing. So, some people like to set like a 20%. Once you hit 20%, you like if you get like if you get like 4 contracts, you sell 3, and then let that one be free. But it just depends on your strategy. You just have to have a strategy on each trade.
Mhm. Yep. So we have our levels already. Let's say you kept on yours for some reason. You just really highly believed in Amazon, and you're either day trading it or you have a swing on it. You know, you want to keep paying attention to it in case you're negative on it. Like for example, ARM. That's what I do sometimes, and it's a little bit more like advanced trading. That way you can make those longer expiration strikes that you have, um, with the ease of mind. Like, oh, maybe if it does go negative, that's okay because I've already made money on the weeklies. Like for example, the ARM trade that I called out today, and I'll go over that later. So we have our levels. We hit our first PT, main PT, and then this is our next main PT, which we did hit today, and that's where it rejected, as you can see here today. And if it would have kept on holding, the next PT should have been where this gap is. So let's go to the 3 minute. So once it came down, look at it. Look at how it acted around this level, right? So it had a hammer here. The next candle closes right on it. It's too close for comfort to go long. And even if you did go long, the next candle, this is where you get out, or you hold for negative 20%, right? And it just hovered around here too long. Maybe you could have, maybe you did go negative 20 max, and it just kept on holding. Or you could have waited for intraday trading. Like a real true scalper doesn't care about previous levels. Only a real scalper will only worry about the current price. So let's say I would delete all these levels. Maybe I do have some levels for the upside a little bit, right? I think in order to be successful on trading or day trading, like weeklies, or as a real scalper, you do want to know where it can kind of go to, right? You can't just have a blank canvas. You can, right? Like here, right? If you're a true scalper, you're looking like that. Okay, you're looking at a double bottom right here, right? That's a pattern, right? You want to. That's one of the things, a pattern, right? That's one thing. Look at this bullish divergence. That's one thing, right? Above the 20 EMA, that's another thing. So that's already 3 things that you could have had for a possible upside move or bullish action, like getting calls on Amazon, right? And then volume. Look, it is another thing. That's 4 things already, right? And then I have my clouds for a trend to tell me trend. So overall, it's still bearish. Look at this. It held the clouds, but it had a little bull flag. The MACD was already still above the 0. There was volume here. Volume is right here. Alright. So once it went above the clouds, you could have gone long as well. Came down and retested. The MACD is still above the 0. You're okay. Look at this. It crossed. What does it do? It goes up, breaks the day's highs. So let's see, you already went long here though, this early, based on this bullish divergence, as you can see here on the MACD. Price kept going down while momentum was showing you possible momentum to the upside, right? A bullish divergence, right? You could see it here too, right? So you always want to make sure that you have multiple things aligning with your thesis or your theory for day trading, especially day trading, right? So you could have gone long. Like I was actually looking at it go long right here when it broke the day's highs, because this is another indicator as well. So I used the double Ichimoku weekly. I used the Bollinger Bands mainly because of the 20 MA, and I used the initial balance. This is a new indicator I added. It was only like this. My charts only look like this until a couple of months ago. I was back testing this one, and it's just so accurate if you're at scalper, right? Let's say I don't have no levels. Well, this is what helps you, right? This is gonna help you with figuring out the levels. So let's say I have no levels, like I said earlier, right? But I do everything manually. So too far back. Okay, let me delete this one, and let me delete that. So let's say like that. As a true scalper, you're only looking at price action of that day, right? Well, you can add this level here, or this indicator. It gave you a long here, and that's common sense. Once it starts breaking the day's highs, you're already long. That's automatically bullish. Hovers around there, goes to the first PT, and then the second PT, and that's where it rejects, right? If it would have gone higher than that PT, your next one is, look at that, the gap. There's always a coincidence, quote unquote coincidence, when it comes to trading. Levels are always matching with your TA, and that's when you know you have a really good trade. That's why we're so consistent on our trades. If you write down all my trades that I call out, or coastways, we're pretty consistent on winning trades, on winning on our trades, you know, and making money, right? It all comes back down again to psychology though, right? You want to cut your losers fast and let your winners work out, or you know, you can definitely make 20%. If you have a good winning percentage, you can grow an account with just hitting 20%ers, right? But you do have to put in about the same amount of money on every single trade in order for the math to math, I guess. Because you can't go, make only 20% and then let your losers go 100% every single time. You can't. Otherwise, it's gonna take you 5 trades to make up with one losing trade. You know what I'm saying? So, and sometimes based on premiums, which is like I said, if you know the premiums on the options, because we're trading options, so you want to pay attention to the premiums, not really the price. You know where it can go, but you also want to keep in mind of the price of the option, which is very important, right? Because you're trading options. You're not trading the stock. You're trading the option of that stock or that ticker, the common stock or whatever, right? If it makes any sense. And that's what a lot of people, I think, mess up on. I think that's really where they mess up on, because they keep on holding because they think it's gonna go there, it's gonna go there. Yeah, it will probably. You're right, but how long, right? We don't know the time. Time is your worst enemy on options. So, but this was probably a 50% upside, or at least a 30%. It was not bad, right? So it gave you a long first PT, second PT, and then boom, that's where it rejects. Simple. Right.
What indicator is the yellow gap?
It's called initial balance.
That. Thank you.
And this is what it's called. And I actually got this from a female, and she trades futures. So, and this was from another Discord that I was in. So it's by CZOA. Okay, initial balance and extensions, custom session time. And this is how I have it set up. I don't gatekeep anything for the most part. So I have it on the 1 hour, day station, 8:30 to 15, 3. I have this off. I think that's how it is though. But I have this a little bit lighter, and that's the yellow part right here. And you can see how these are very important as well. So it's a really good indicator. I back tested this for a couple months. It's pretty accurate.
Is the PT thing for
That's
the white
price.
line still a thing?
Yes. Yeah.
Price target?
PT, price target. Yep. That's what I'm saying.
And
like
that's a script too, right?
I guess. I don't know. I don't know. I mean,
What's
there
an
might be a
indicator, right?
combination of something. Yeah, I think they can't, but it might be a combination of other ones. So I don't know. I mean, you can check it out yourself when you look at it. It's for free, so it's not locked.
Initial balance. Oh, that's what it is.
Yeah, it's not locked or anything like that. So, but this is how I have it. You can add like the second. See, I have these other levels from the previous day. That's it. Because sometimes they do play a little bit of a role, but you can mess with it. But I have it like this. This is how I have it. Right. You can have it on the 30. You see 1, 5, 10, 30. I have it on the 1 hour. The 1 hour.
Okay.
So that's Amazon, and we are in an Amazon Lotto upside, and we were green earlier today. So we'll see, but it is pretty far out the money. It's just pure speculation. We're expecting a gap up. We're a nice green day movement on it, like a really nice green day, not like this, like where it pulls back almost to the previous day's lows and then it goes. I'm looking for like this type of movement right here, like here, really nice green day, and then the next continuation, or like this, a gap up, or like this, a really nice green day. Or like this one, so it goes green and then it gaps up, goes down and goes up. But this one, it's okay. So I'm just looking for a really nice continuation, and you can see how Amazon doesn't really have that much, but it does every now and then. Like right here, it just kept going, right? Or like right here, this is what you really want to see. These are really nice premiums on these.
Can you better explain with your strategy too, with how you're picking the contracts based off of the gaps too? The
Yeah.
premium?
So remember, I called out the 230s. Called out the 230s. Let me go back to my Amazon to make sure it was the 230s, and that's because of the gap. If I remember correctly, when I was looking at this trade. So it is the
Hey, you see
230s.
after that, after that, please can you show because my cousin's on here, how to add the volume to your on your trading view, please?
Yeah,
Because I'm not in front of a computer right now.
and I don't
Thank
really
you.
use the volume on TradingView, but I'm only showing you the volume here just for educational purposes. But I use the volume on Thinkorswim, which is way more vivid. All right, you can see how it's vivid right here. Right, super vivid. But um, I'll show you in a little bit how I add the volume. I mean, it's just an indicator. So, but I do pay. I do pay. I have a subscription on TradingView that allows me to have more indicators. But back then before I paid, I tell people you can search up indicators that have a bunch of things already together, like you can search up multiple moving averages or something like that. So this one's gonna have a bunch of moving averages or something like that. You just gonna want to look around and do your little research. For example, the double. This one that I have has a lot of moving averages already, right? So if I were to go right here, turn it on. So it has like the 9, the 26, like that. It has the 200, the 50, the 100 moving average. And see, this is the 200, this is the 100, like that. So there's indicators there that can give you multiple indicators in one indicator, if it makes any sense. But I just go to here, indicators, I added volume, or I searched the volume, and then right here, this is the one. So, I can show you, and I'll add it again. So I just deleted it. Go here, volume, and there it is. And then I just move it to the pane
You found somebody?
below.
I was looking all over there. Where were they?
Oh, hi, Mike.
Really?
Can you mute him?
I got him. Hi, Mike, CJ. There we go. But yeah, that's how I added the volume. But I use the Thinkorswim volume. But I mean, if you don't have Thinkorswim, you can just use the volume here on
So
TradingView. It's pretty
I
decent.
got it though. I appreciate it. I just signed it.
And the 3 minute
That's-
is the best time frame, in my opinion, to read the volume. Okay, the 3 minute. The 3 minute. You can backtest it if you want or whatever suits your style, but the 3 minute is the best. Like right here, had really good buy volume, so you could see foreshadow move back up. And I'll explain SPY upside today that I took, and I'll explain how I determined that prediction way before it even happened, that it could possibly go up towards the end of the day.
So before you were doing that for CJ on the volume, what was that you were going to look at? You were looking at premiums, or you were going to look at something? Asked.
So I asked the question of how you're getting,
The strikes.
how you're picking your expiration dates, your strikes, and how you're basically gathering information on what premium you.
Yeah. So we know that it moves slow, right? And there's a catalyst, right? So when there's a catalyst, like you could expect some volatility. So you could go closer or further. I decided to go to the 230s because of that gap area. So I figured, oh, it's got a catalyst. It's got a consolidation. The MACD, the momentum is gonna possibly, have 2 really nice green days or even 3, right? Because as you can see in the chart, it does. For a few days, it goes green, or it has 2 really good green days, the minimum, right? And based on that, I was thinking, oh, I could make money, right? Just on that, right? But it didn't work out. So this was a losing streak, right? So for those that I don't post winning trades or I don't talk about them, I do have losing trades, right? You lose some, you win some. But let's go actually see how much those are worth for this week. Maybe if we would have got like October 17th, it would have been a better one. But then again, it would have been more expensive. Yeah, so I paid $138, and they are worth $80. So I would still be negative, right? So it just still wouldn't work. Maybe if I would have had October 17th 230s, and we can check that right now, and I'll show you the premiums on the chart. So the good thing about TradingView is that it does have premiums. It makes it really easy to show you, like, for educational purposes. And I am not a professional, so whatever I say is just for entertainment. I'm not a financial advisor. All right. So go to options, Amazon. We can go to October 17th 230s. There we go. So we got in on those 230s on the 2nd, right? So on this day, and it was at, let me mark it, that way I know real easy. Let's go to a 3-minute and see what that price was actually worth when I got in. We're gonna compare my entry time with the price of these ones. That's an extra week, right? So it's on this day, the 2nd, right here. I got in 214.
Because that's where the gap. Why'd you pick 230 again? Sorry to interrupt, but
Yeah, the gap.
yeah, the gap. Okay, yeah. So yeah, your strikes are usually the gaps or where it could go.
Yes, or in between the beginning or the end. Yep.
Yeah, because by the time it expires, you want to be close to the money or in the money.
Yep. And if I'm trading the weeklies, then I get, you know me, I get closer. So I got in at 12:14, so around like right here. Let's say right here, the price. Let's say the price was 250. All right. That's pretty expensive compared to 138. Right? But then again, you paid that extra security, right? You're paying that extra price for that security of like, oh, I have extra time, so anything could happen within that time. It could come back to life, right? But entries matter a lot because look, 250 all the way negative to all the way to 100, and that's over 50% negative, you know. You could have averaged down here, but price did go lower. Premiums went lower. It didn't, because sometimes premium price will hold, and a consolidation when price goes down. And let's do this. Let's pair it together with Amazon. There we go. Let me put Amazon here. So the left is the price of the premiums, and the right is the price of the stock. So let's say you held it and you never averaged down. Yes, you would be green. So this one, if you can hold, right, which I really can't. When I start seeing green, I take my money. I want to take my money out of the market, right? I don't want to go negative, whatever that is, from 250 to 100. What is that? Crazy Cat, since you're a little better real fast. What is that? Negative 60%, I think. Am I correct? Negative 60%.
I'm not good with that kind of math.
Let's see. Let's do it real quick. 250.
No, that's crazy. That's a crazy cow zone.
Yeah. So let's see. 250 minus 100. You're down 150 a contract. 250 times 0.60 is 150. So yeah, it is 60% negative. So you would have had to go negative 60%. So you could go. They went as high as right here. Let's see what the high of this was. It says 330. Let's say 320. 320 minus 250 divided by 250. That's almost 30%. So negative 60 to positive 30% is not that good. Well, I mean, it's still good, but holding for negative 60 is kind of crazy. I mean, like you could have got out at negative 20% and then got back in at a lower price if you still liked it and had really high conviction. But it still would have worked out though if we would have just held it, right? So, and then obviously you probably would have been a lot less negative the further time you get, right? Because that theta is not as bad. So instead of being negative 60, maybe you would have gone negative 40% or 30% based on how far you got out. So, but we were expecting a quick move, a fast move on Amazon, which we didn't get, so we were wrong on that. So like I said, the only way to combat that is by getting time. And like I said, I was expecting to move already quick on it, but it didn't happen. It just might. Like ARM, right? Took a little bit, and it happened. All right. So we understand how we got the levels and stuff, and why I chose that strike. It was because of let's go on Amazon. It was because of the gap. Or I could have gone the 225s this week, but they were going to be expensive, right? So you kind of want to, I mean, that 225 would have been better because you would have been in the money, right? It's always going to be better getting closer to the price and getting extra time. It's always going to be better, always. All right, so the wicks. To recap, wicks, we get our levels from the wicks. There's the most important thing. We want to look for any type of pattern consolidation so we can fit our theory of or our bias on it. But you don't want to be too biased.
So I have a question though. So when do you do out of the money calls? Like when do you do out of the money?
It's super rare. It's like I'm either looking for a quick spike, but it's super rare. Most of my trades are close. Every now and then I join in because y'all are in some further ones, and I usually like pay attention to who's calling out consistent trades that I can trust. Like, oh, okay, they've been calling. Usually so.
Because Makowski, he always calls out of the money calls.
Yeah, but how many of those trades are actually, how consistent is he? I can't speak nothing. I can't say nothing because I don't really know, right? Like,
right.
Like, I'm calling the strike my entry and my expiration and what time, right? I just showed you my time. I put the screenshot there of what time I got in, right? And there's not, I don't know if he does or he doesn't. I can't say that, but we know.
Exactly.
Because I am recording.
No, I was just asking just in case somebody on the call wanted to know, like, so when do you ever get out of the money calls or something like that?
Yeah, no, it's rare because the way I trade options is I want to have a high probability of making money. Somebody's got a really hot mic. Like breathing in. I got it.
Shit.
All right, let's go to the next trade, and I'll go over the same process again. So hopefully it gets easier to understand on how I pick out the levels and what I'm looking for. So, like for example, on this day, also it closed inside the cloud. So once it broke out, which was today, then now it has an even higher probability of actually going out, having follow through for the next few days. So it's just better to get time on Amazon because Amazon does like to take time. Like it went up here, then it came back down. So you probably went back to break even on the leap, and then it finally goes, now you're green. And it hits this high area, so you want to definitely be taking money out. You want to be trimming, because look at the next day. Comes right back down.
So just to kind of like reiterate what you're saying with time, like are you just basically going over the last long consolidation and then picking the contract if you were to pick out a long contract?
Yeah, because remember my trades are like,
how...
that's why I'm so patient with the triggers, because the triggers are going to help you pick out how much time you really need. You know what I mean?
Yeah, and it's specifically the last long consolidation, right? Not the average.
What do you mean, like the average?
Like if you did like if you went like to the weekly chart, for example,
Uh huh.
and you would just pick the previous consolidation to pick your expiring contract, but the average would be like more like the monthly, right? That's kind of what I was uh thinking.
Oh, like the strike that I would pick out.
Yeah, for the strike and for when your contract expires.
Um, yeah, like normally, if you're looking at the daily, you can get away with getting like within that same week or the next week, right? Which is what we did. We got this week's last week, so it was a week away. So, maybe I should have got next week's. That way, it actually would have been 2 weeks because we got it on a Thursday, right? So, like for example, Coast has a January, right? Because he is expecting for this to actually break out on the monthly or on the weekly, right? Because 250 doesn't exist on Amazon right now, right? It doesn't exist. The
Yeah,
highest point on Amazon is 242.52, which is right here, which happened on this week of February, right? So 242.52 is the highest point that Amazon has ever been, right? So he's looking for a break of that, and then 250, and 250 is a psychological level, so they're gonna pick up pretty decent. 52, right? And I mean, like I said, you could wait for a lot of confirmations, but I'm looking at the daily mainly. Now, if I were to look like a penny stock, then I would go to the weekly. Remember when I said, oh, we're having big moves? Like you'll know when to go to the weekly chart based on the movements that we're having, right? Amazon moves usually good on the daily, so you don't really have to go that far out like the weeklies and monthlies, unless you're in a leap. If you have a leap, then yeah, sure, go look at the monthly and the weekly, right? But since we're getting 2 weeks out max, or maybe the same day, which is the weeklies, then you want to look at the daily. Like tomorrow, let's say if it goes down, I'm gonna look at a 0 DTEs for a bounce back up or something, kind of like how I did with ARM today. So I can go over ARM today and why I got in on that one if y'all want. But I was gonna go over other ones that we had that were winning trades, and ARM was actually a really good winning trade today. So let's go to ARM, and we're gonna restart everything from the very beginning. This is all my TA on ARM. As you can see, I have gaps, I have wicks. So we're gonna do it all over again. There we go. It's a clean chart. So ARM from previous data, right? We're gonna look at it as if this hasn't happened yet. This, as if this hasn't happened. So there's a gap here. Look at this gap. You can clearly see the gaps, right? So it closed on this day, which is 163.32. Whoa, why is it white? Oh, I see why. It's a little dot. There we go. I said 32, right? Let's see here. Yes. So I'm gonna color code that, and then this is the gap already from this high and that close. So this high was 149 to the penny. So that was the previous gap, and then this happened. So my data on that, so it was like this. I turned that into green, and now the new gap was here on this wick. So this is the most current gap, 158.89. So I already had been looking at ARM for a long time. Okay. So I had it like that, drawn out like that already. It went 75% of the gap. So I already had TA like this, so it went 50%, right? This is about 50%. As you can see, it had trouble there. It went a 75%, then it stayed under 50%. What does it do? Reverses pretty heavy back. I'm only doing this so you can see, for educational purposes, why 50% is always so important on gaps. And this is where I always say where big reversals happen, and you can clearly see it here, right? So that's just that. I just wanted to show you that. This one doesn't matter. Okay. Oh, let me go back. I think I had it. There we go. Okay. So I'll have my gap already. I'm looking at it since here, since about 2 weeks ago. 2 weeks ago. Based on this consolidation. Like that. Alright. And we did mention this movement. I mentioned it on this day. I said, I've been watching ARM, and then this day it goes crazy. This was on a Wednesday. This was October 1st last week. On Wednesday. So, but I already have been watching it since like 2 weeks ago. So this was last week. And I said, interesting action on ARM. And I had this as well on it. This was a gap. So. Once it broke out of this was your trigger to go long here. Or sorry, that's one of your PTs. That wick, and then this is your trigger to go long right here on that wick. I'm going to zoom in so you can see it more clearly. So this is this high, which is 142.80. That's your long entry for that week. And this is your PT, the highest. And look, there's a gap right there. It flew, it literally filled the gap like butter on that day. And it went exactly to this, the start of this gap, which was here. So, and it closed above it. What does it do the next day? It goes up, fills it, has trouble, and it gaps up. So when we got in on ARM, let's go see when I got in and why I got in on that one. So ARM on our October 31st. ARM, where is ARM? Okay, so I got in on ARM October 31st. Let's see what time. And I'm going to go over today's as well, the ones that I called out for this week.
What you talking? October 31st last year or what?
This year.
Oh. First?
Yeah, 10:31.
No, 9:31. No, 10:31. What the hell am I doing?
Yeah, we're in October.
Isn't it only the 9th?
We're the 10th. We're in October.
Yeah, you said October 31st.
Yeah, doesn't October have 31 days?
Yeah, you said you got in on October 31st. It's only the 9th. So how'd you get in on the 31st?
No, I got the October 31st strike.
Oh, I was saying.
He's saying the expiration date, not the not the actual day that he got in.
Yeah, I got on the October 31st contracts.
Yeah, I was tripping. All right, cool.
Yeah. Okay, so we got the 200s. Let's see here.
It's just a baby.
All right, so this is my average, and this is my entry on the October 200 calls that expire on October 31st. So I got on the October 31st $200 calls. if it makes any sense. All right. So it's I posted on main chat. ARM $200 calls that expire on October 31st or 10/31. Average was 134. Okay. And I called it out on October 7th, and I got in at 12:32 p.m. right after lunchtime for me, and I wrote it on my channel. So we're gonna go to that date. We have our levels, so these levels don't really matter. What matters is this other ones. Let's see, from October 7th. So we had this gap, so it doesn't really matter, but the level does on this. So we could have had like that. I'm gonna change this to that color because it did get filled. Actually, there's a gap here, so that one hasn't been filled. So we're gonna do this. 152.64. Right, am I tripping? Close 152.64. Oh wow, wait a minute. 152.64. Dang, why is it? Whoa, that am I tripping? That was weird. Let me see. Hold on. Am I seeing this wrong? Oh, it just froze on me. That's crazy. Oh, there we go. Okay. So this close on arm 152.64. Okay, yeah, I was tripping. It like moved this one lower. That was weird. Okay. Oh, I see why. Okay, because I had clicked on this one and I wrote the level for this one, so I needed to click on that. Okay, I get it. Interesting. Yeah, that kind of tripped me out. Okay, low 154.35. That's why. Oh, whoa. Y'all saw that, right? I clicked on this one, not on this one. Oh, it's weird. Okay, let me click. Let me make sure I'm clicking the right one. 154.35. There we go. So this is what your TA should look like. Like this.
Bro, why y'all still on here? You see APOD 15%.
Hold on,
I
Blight.
could. Bro.
Hold on, guys. Okay. So that's the gap that eventually will get filled, and we have this gap. So this gap, as you can see, 50%, it got filled, and it had trouble until yesterday. It went down and then it went up, went over the previous day's highs, went completely filled the gap, and today, when I called it out for a long, it went to retest this high or 50%, and that was the absolute bottom on it, and that's why it worked out beautifully on this. So I have my TA, right? I have the gap level. I have my PTs. I have this PT. Remember, this PT, this wick and this wicks are too close, so I'm just gonna choose the highest and this one right here. That way I know where the highest points are. So this is 166.88. Whoa, tripping again. 166. There we go. And then this one is 168.31. And then we have this other ones here, like here, and we have a gap. So remember when I said I want 180 because of that gap, and that's why I chose next week's 180s, but we're out of those already. The ones that were in as a runner as the 31st, right? So this is close here 179.93. And the high of this is 173.95. So that's one gap, and then I'm looking for other gaps, and there is another one right close to that. 173.95. The close of that is 173.26. Right on it, and the high of this wick. That's exactly where we're at right now. So we're in. We went to this gap already, so that's gonna be 170.74. And you could have it like this. You could draw them in, or color them in, fill them in, whatever. And look at that. We went 50% of it and we rejected there. That's 50%. You can have it like this. 50%. So today when I got in on the ARM or the weeklies, we can go over the weeklies, or when I got in on this, on the ones that we called out on October 7th. So October 7th was this day, right? So on this day, it was in, it had gone below the previous day's low, and then it went above the previous day's highs. And we were in already before that had happened, in anticipation that it would actually finally go. Because remember, everything that has to do with chips, remember, there's another thing that's a little bit more advanced trading, which is like you want to pay attention to the whole market of what's hot, right? And what's hot right now is quantum, AI, and semiconductors or chips. I call them the same thing. So AMD, we've seen what happened with that. We've seen what happened with NVIDIA. We've seen what happened with TSM, LRCX, SMH, ASML. All of those have one thing in common, and they all do their chips or semiconductors. So, but ARM is a lagger, right? If we look at other charts like AMD, right, huge movement up. NVIDIA is going up. TSM is going up. SMH is going up. ASML, it went up. LRCX, it went up. So you know, a lot of things. SOXL, right? SOXX, you know. So we go to ARM, and what does ARM look like? Doesn't look like the rest, right? And it actually looks really good at when you zoom out, like on the weekly or monthly. So you could definitely get a leap on this, because it could eventually break out or have one amazing day like here, or like here, or like this, just upside. On these days, I think we did look at them, and I think we might have. I think I did trade some, but if we would have swung, we would have made like 1,000% plus. You know. So we get in on this day. I got in at 12:32, and I think there was some flow that was coming in as well. So we went ahead and got in on there was flow for the 200s, I think, and I said, you know what, we're gonna go with the 180s that expire next week, and we're gonna get the 200s that expire on October the 31st. So, and that's the main one because we have more time on that, and we know, like I said, remember, screen time is your friend. Remember, Amazon, we know that it's a slow mover, and we know based on history that ARM can go crazy in one day, right? So that's why we got some that expire next week and some that expire on October 31st. Maybe I should have got some Novembers just to capture the whole movie. Maybe a breakout over 180, maybe goes to 200, you know. So, but we'll see. I'll just day trade it the weeklies. That's okay, you know. So we got in on the 7th, on this day. I got in at 12:32. So I'm gonna go over this one first, which is the one that it's for free, that we're in, last runner. So, and then I'll go over the one that we traded today, which I kind of explained already a little bit of why I took those this morning, early morning, and I'll show you my screenshot of when I got in as well. And I was buying them at 120, 130 something as well. So I was buying a few different prices around the absolute bottom. So I'll show you my most expensive. I think my most expensive was like 130 something. So, but I called them out at 120. Okay, at 120, which was cheaper than where I even was getting some. But I got in on the 7th, so it was an inside day, right? We knew that there was a gap, so I figured, you know what, it might hold this gap. Let's look at just pure price action. We don't really need the initial balance because we have our own TA already, but if you pair it with that, it's amazing. It didn't even give you a trigger anyways. So like here, well maybe it doesn't have it. I don't have it, but like on here, they give you the first PT. That's exactly where it went, and then the second one, and then it went in between that. So I'll explain these last two ones the maximum, or like today. See how it gave you? This one's kind of wonky today, but it did hold my clouds, and it ended up going to the first PT, and that's where it kind of rejected along with 50% of the gap. So we don't really need it though, right? This is just for like if you really want like extra help with PTs, like when I say PTs, I'm talking about the price targets. So this is gonna help you a lot. It's gonna make your life a lot easier. All right. So we know trend on this day. Let's see what time we got in. So I got in after the clouds. So remember, I'm looking at all the possible scenarios. I got in at 12:32. So, and this was October 7th. So based on price, right? Once it goes above my clouds, that's a bullish, or it's a change of trend. It's just a change of trend. It doesn't mean that it's bullish or bearish. To me, I just say change of trend. So it just means that instead of a probability of going down, now it's a probability of staying up and going up. So we know that when we got in, which is around like around here, right here. So I'm gonna write that down now. Here it is, vertical line. 12:32. About right there. So I got in right there. So let's and we did have a gap. So that's a reason why I got in as well. So the gap on that day should have looked like this. So every day you want to adjust it. So that's what the gap looked like. Let me change this to here. But I left it like that because of the original gap. That's 50%. So just remember that, okay? Just remember that. So, but on this day when I got in, I already knew that from this point to this point, there's a gap and it had filled 50%. That's why today, when I called it out, we were at 50% of the previous main gap, if it makes any sense. So hopefully it's making sense, and hopefully I don't confuse you. Right, so we got our levels, we got our gaps. We're looking at the wicks now, right? I got that wick, that high is 160.54, and you want to have it as a blue. Well, I have it as a blue because it's a gap, and I want to know if it's a gap or not. So, and I'm gonna leave this as blue so you can see it visually that it was still the main gap, this gap, and 50% was the bounce today. Okay, if it makes any sense. So, all right. So let's go back on the 3. So we were seeing flow coming in. I get in on that at 134. I called it out on my channel. Right, I said on my channel that I'm getting the October 31st and I'm getting the October 17th on ARM. Okay. And I wasn't too heavy on these until I saw a little bit more confirmation. So, and today I decided to just day trade it and make pretty decent money on it. So, and we hit 200%. So, all right, let's take my clouds off. But on the daily, you can see how we're bullish already, right? We're bullish above the clouds. So, or I should say, it's a change of trend on above the clouds. You could say bullish, but sometimes it could go above and below or be inside of the cloud. Like here it was inside. It didn't really do nothing, so it wasn't bullish or bearish. But you could say, I could still get away with saying it's bullish. But let's just say it's above the cloud, so it's a change of trend. It's probably has a high probability of going higher, at least to this PT, this next high point, and then this high point, and then the highest of all, which is here. This is the highest I think that it's ever been. No, it's not actually. It's this one. And I know it looks like a lot of levels, but once you zoom in, because remember we're sometimes day trading these, it's gonna look less cluttered. So let's go to the 3. and we know on the daily that overall it's bullish, and we have time, so we don't have to worry too much about the shorter time frames on the clouds. So you could take that off if you want to. Sometimes I leave it or whatever, but so it could look cleaner for you, I'm gonna take them off. So it's an inside day. We go a little bit lower. We bounce from the previous day's low, which is where the gap starts. There's no candle body close. Remember, that's one thing I think I forgot to mention, that I look for the body candle closures on the wick levels on the 3 and the 5. Once, oh, I did say that actually. I said once you get the body candle close on the 3, then you go to the 5. Right. So for example, here we went under the day's low, the previous day's low. We could have filled the gap, but we didn't. And that's because we didn't even close under on the 3-minute, right? So there's a little hammer as well, and there's a little bit of a pattern there, right? That's an inverse head and shoulders, right? There's a little bit of volume on the 3. The MACD, it's a little bit of a bullish divergence. So you see how it's the strategies when I take trades like on the weeklies for scalps and stuff. It's almost the same thing almost every single time, right? See, price is what? Flat, or you could even say downwards, right? Whereas the MACD going up and there's a little volume here pop. So that's foreshadowing a possible move up later on in the day, right? So I'm looking for the same, almost every trade I take is the same thing, right? Same thing. So on this day, I already had noticed that we have made a double bottom, right? It went here, and then here. That's the double bottom. 1, 2, hammer as well. Went going up towards the 50% of the gap. Remember the original gap was no. It went to where the gap began. All right, this is where the gap began on this line or this level, 158.89. Okay, that's where the gap began. So, and that's why I got in on there as well. So notice how we closed on the 3 on the small time frames. It was already above the clouds. I already know on the daily we're above the clouds, right? You could say that's bullish or a change of trend, right? And on the clouds, so I know that the MACD is above the 0. There's some buy volume, double bottom. We're back reclaiming where the gap starts. It's a big key level, right? That's why I got in at that time, right? And we saw some flow. So we get in on the 31st, 200s and the 180s for next week. So that same day we start going green, right? And you could have trimmed already on that day, and then the next day we go down, then we go up again, and I'm thinking, man, okay, I'm noticing this, by the way. Every time I'm in a trade, I notice patterns, right? We notice the patterns. So like for example, every time it goes up, the next day it kind of gaps down or sells off, right? It did it today. It went up. What does it do? Gap down, then it goes up. It did it this other day too. See how on this day it went down towards the end of the day, and then the next day just went up, right? So my point is that it usually tries to go up towards the second half of the day, for the most part, or at the the beginning of the day, and then it kind of sells off or stalls, and then the next day it resumes back up. So it did it here, right? So on this day it actually went down, but the next day it went up. On this day, I guess you could say it started going down, and then it went up early morning, right? So that's in the morning, a.m. again, and then what did it do today? Right? It was going up, going down a little bit, then back up in the a.m. So see, it did it 3 times in a row. So I said, you know what? We're gonna get some weeklies 170s for today. So that's me explaining that trade in the morning. But going back to when we first entered, it was on this, and I already showed you that we were above the clouds on the daily, above the clouds on the smaller time frames, the 3. There's buy volume, double bottom, MACD's over the 0. There you go. And we have a gap above. So I wanted to us fill the gap completely, either that day or this day. And also, here's another thing. This could be for another day, but this is a key reversal day on this day, because it went below and then it went above that same day. That usually means that it could continue or it could reverse. And the next day it actually went higher. Right? So it worked on our favor. So, but we already knew that overall it was looking bullish based on everything else in the market, right? AMD going up, blah blah blah, that I went over earlier. So that's that one, right? And then today, and I'll go over the premiums if you want, but like I said, that's way more like advanced reading the premiums in my opinion. So today, remember, this was 50% of the original gap. Right, the original gap is this. Alright, that's the original gap. So let's say this level doesn't matter no more. What matters is yesterday's high of day. Oh, actually, yesterday's high is that. Let's go closer to 50% on this first day. You could, but I wasn't really paying attention that much to this level. I was only paying attention to the original 50% area on it, and I had it like this. So I had my everything on. So I don't think I had this on today. Yeah, I didn't have it on quite yet until the first hour, but sometimes I do have it on. So I'm on the 3-minute, right? Market opens. It's gapping down. It's still above the clouds, so you know, it's still looking bullish. So the original gap goes down about 50%. I go long, and this is the highest one right here. Wait, what? Joey's on here? Oh no. So I was getting some pretty early on ARM, but I had really high conviction on it that it was gonna go back up. So I got on the weeklies 170s today. Whoa, I was actually buying them pretty early. Damn. I thought my most expensive was like 130. This is my most expensive one. So you can see how early I was getting in, because I knew it was gonna bounce, or I had high conviction, because I don't ever know. No one ever really knows. I just had really high conviction. I posted on main chat. That's my most expensive one. Wow, that's interesting. 145, the 170s. So, but when I called it out, I was getting some at 120. So, and I think it even went a little bit less than that today. Right, and you can see my time on that. How early I was getting it in the first within the first 5 minutes. So, and even if you would have got in that early as me, it still ended up working out. So they went pretty high. You still would have got minimum of 50%, but it went over, well way over that. So I get in on this candle right here. Yeah, 8:34. So right here on the bottom bikini bottom, man. So let's see here. Where's the vertical line? There it is. So on this, the literally absolute 3-minute candle that formed the lowest point of today. That's when I got in at 8:34. The next candle is 8:36. Let's go to the 1 minute actually and see if it was right on it. Almost 8:36. Right. No, 34. So right here. So on the 1 minute, on this candle, this is 8:34. The next candle did go a little bit lower, and that's when it had a hammer, and then from then on out it went up, and then it came down a little bit, then it went up. So, and that's when our premium started going up. We got the perfect entry on this one. And I snapped the bottom because, like I said, I was looking at a previous 50% along with the 3 minutes. Like I said, that's why I like the 3 minute, right? And you can see on the 3 minute how we came to basically retest the clouds, right? And that's the trade for today. That was my most expensive one. So anybody could have had a chance to get in cheaper than me, because I was getting some cheaper than 145. But that was my earliest entry, and I was just buying a few. I just kept sending order on that. All right. And then look, premium spikes up. You could have already, started taking some profits, because that's how fast they move in the morning. That was my entry, and I called it out at 8:36. So 2 minutes after, I was already getting in on some. So you had a better entry than I did. And then I can go over serve as well, and I'll show you my entry and my time. So I got in on both of those trades about the same time. So I'm fast, I'm fast. I'm scalping. So, and literally right after, like within 6 minutes, we were already 50% on ARM, right? 6 minute trade, 50%. That's not bad. Could be done for the day. So, but hopefully that makes sense on why on that, right? At 50%. So, and then our next PT is going to be where this gap is, and that's exactly where we went. Had a little bit of trouble. We went 50%, and we rejected, right? Our main PT though is 180. That's why I was choosing those strikes, 180s, and then the 200s for just in case we have an insane catalyst like I don't know, a partnership, and then we just instantly gap up. It's possible. So, but even if it doesn't happen, they are completely free now, and we traded the weeklies. So we've traded. It's been a cash cow. Like we've traded the 17s, we've traded the 31st, and we traded the 10s today of this week. Sorry. So, and these ones went amazing, right? Because obviously, the riskier it is, the higher the reward. So that's why I chose the 180s, because of the strike. The strike 180 because of the gap. The highest point is 180, and there is flow. I think most of the flow was actually for the 200s. If I'm not mistaken, I think there was 180s. So that worked out beautifully. And let's go to serve. So serve, go to the daily. As simple as it can get, right? We have where the gap starts at our highest point, which is right here, 1552. You might ask, why not here, or why not on this day? Well, that day happened 2 days ago. That was on Tuesday, right? So I just left it like that, but you could have it like this. There you go, if it makes you happy. The highest point is 1565, but the original was here. We already knew that there was a big gap, right? And we first called this one out. Well, I'm only gonna talk about the weeklies that I called out today, but I'm gonna go over when we first called out serve, and that was on for our leap. right? Because it's robotics. We had some speculation that robotics was the next big thing for a few weeks. So, okay. We got in on August 27th, so let's mark that. August 27th. Boom. On that day. Let's go and look at the leak on it. Serve. So for this one, we had a lot of time because, like I said, we had some speculation. It wasn't as popular as it is now.
That was an unbelievable entry on those leaves, man.
Mm-hmm.
Killed it. You and Steph, right? Sarah was brought it to your attention too. Yeah.
Yep. And I'll show you why I got in on that. And there's a reason why I got in on today too. And I'll show you why I called out those next week's shorter expiration. There's two things in common on these 2 days. Okay. So we got in on August 27th. Average 205. And on this one, I actually I was in before I even told y'all about it. Like I said, I do get in on some personal ones, and the ones that I really like, I tell ya, cause I'm in, and it's my money. I don't get paid for anything, and I'm not trying to clap my own self, and I'm not trying to clap nobody. Whoever's gonna tell me, it's just my own opinions, my own trades, and if you like how I trade, you can tell me, or whatever. I am not no professional, right? So I think I wrote it. What time did I write it? I wrote it at oh wow, yeah. Oh, okay, that tripped me out because I forwarded it to Moon today at 11. So I'm like, wait a minute, that's not right. I was like, there's no way I called it out like 2 hours after I got in. Fucking pumper. Nah, just kidding, yo. Nah, I got in at this time, guys, which is right when I alerted it too. Like I said, I'm getting in when I'm telling you, man. So if I like it, I'll tell you about it. So here's the leap when I called it out. Serve $13 calls for January 16 on August 27 on this day. Got in at 9:06, and I wrote it on my channel at oh yeah, I actually did get in way earlier before I alerted it. I alerted it actually at 9:32 a.m. What day was that? Was that a Tuesday? Let me see here. September 27th. No, August 27th. That was a Wednesday. Dang, I must have been busy here, or no? Was I here? Usually I'm here on all day Wednesday. Interesting. Yeah, I don't know why it took me that long to write it. That was the first one that I wrote on there. At 9:32 a.m. But my entry was at 9:06. 9:32 I wrote it, but my entry was at 9:06. All right. So, anyways, let's go back to why I liked it and why I got in. So, like I said, you want to look for any divergencies. So we're gonna go over that right now. Why I liked it and why I got in. Right. And there was flow coming in. Remember, there was some flow in robotics coming in. So, and we knew some anomalies. I looked at the chart immediately. I see a pattern on this cup and handle. I see the bullish divergence. And on that day, I think I had seen some flow the previous days on that. I'm not too sure. I can't remember. It's been a while. But one of the main things why I got in is this. I think I had a trend line like this. So it was breaking a trend line or visually, right? And also it was going over the clouds, and there was some buy volume on the daily. But the main thing was it was a gap up, right? Remember, when things gap up, there's an anomaly, right? You want to go and look at that, or a gap down, right? Either it's gonna make a consolidation and then go back up, or it's gonna keep going lower, or vice versa. It gaps up, consolidates. It could have gone higher, but it actually came down. We held through that because we had a leap, right? Even though we were in early, the reason why I got in is because it had broken this. The MACD was bullish divergence for a long time, right? It came down. It was too close to the zero too. Even when it came back down, and we still held it. We still held it. Right. Then it starts going up, and we're making money, right? We're making money. It goes up, and then it sells up. On this sell up is when we all start taking most of our profits, like ASTS, Mara. I can go over Mara too if you want, but it's the same thing. Every single trade has got the same type of setup. So you can clearly see, even when it pulls back after our entry, the MACD is still a bullish divergence, right? Still a bullish divergence. So we hold it. It's a leap. We know it. It's still in this falling wedge or bull flag, whatever you want to call it, right? And we weren't even that bad on the downside. They actually held pretty good. Okay, so we trimmed. I got out and then came down and I got back in at a little bit higher price, but I'm still green overall on it. So this one was actually a cash cow. We can actually go look at the premiums. It was a cash cow. You could have traded this quite a bit of times. But the reason why I called out the next weeks, and I mean you still could have traded the weeklies as well, but I just felt like it was better the next weeks because of we already seen this gap, right? So that's that, and today we had a gap up, right? We had a gap up. That's why I like the shorter expiration because we finally had an anomaly, and this was a second gap up that we've seen that was actually really good. And the main reason why I called it out is because of this. We went inside the gap, the original entry right here. We went back inside of it. So, and I was like, you know what? As soon as it went in, it started going up, and I got in when I called it out on serve for next week's. Pretty damn near the same time I was getting the arms. So I got in at, I'll post my screenshots for my entry and my average. For the 17th next week. Alright. And this is pretty early in the morning, guys. Like I'm scalping pretty fast sometimes, you know. And I only mainly tell you the ones that I think anybody can be able to get in, right? Because not always when I get into something, you're not always gonna get the same average. Alright, so I posted my serve entry. I got in at 840, and I got in at 105. And I called it out today. For that, so at 840, 841. So 841 is when I called it out today. So literally like a minute right after I got it at 105, and I actually went negative on it a little bit. So you would have got in the same average as me, or even cheaper. I went a little bit negative. So we have original gap start. Let me make sure it is the original. It's gonna be 1552. That's from the wick, right? and it was a gap up, and it finally went over it, right? It looked like a cupping handle, remember? Moon said that, but overall, it was already a cupping handle here since we got first entry, right? And if you're still holding those leaps, um, I am the Januaries. Um, I trimmed most of my next week's, and I'm actually in on some 20s for next week's. I didn't call those out because it's just too risky, right? The 17s is the less riskiest, but I'm still in on some of those, and I did take some profits. So I'm in some 20s and 17s. I only called out the 17s. And the reason why is because of the gap, right? The gap gets filled almost at 23. So, and 50% is 20. So it could very well go higher tomorrow and into Monday. It can go, I'll be in the money by $2 if it keeps going, right? So that was our first time when we got in here, came down, then we started taking our profits before it came back down. You could have got back in here at the, like, super cheap. So, and the premiums were kind of wonky too. Like I said, it was a cash cow because I think even here, I think you could have got in pretty cheap as well. So, and it's actually up after hours. Nice. So let me see how many times I traded this one. Oh yeah, man. Sheesh. Yeah, we were taking profits really good on this one. Jesus almighty. I was trimming on here. September 23rd. Where's September 23rd? On this day, man. Sheesh. Yeah, we were pretty good at, I figured this could be a double top. I'm gonna trim some. I was selling some at 330. I can see here. So yeah, and then look, it came down, so it was good to trim. I think I got fully out on this the next day, on Wednesday, and then it went lower, and I'm happy. And then I got back in, I think, like here on this day, I think, because we closed the gap. Yeah, I gotta go look at my full history, but yeah, I was selling some on the 23rd, so not bad. And this was an inside day reversal. You see that? So it was kind of like AMD, and we'll go over AMD in a little bit. But hopefully you get the gist of the way that I trade. Right? There's a gap up today, just like on this day, and it could have. This was a high probability trade. It was gonna keep going, because like I said, it was breaking. It was above the clouds. The MACD was almost above the zero, and it was a gap up. That's an interesting anomaly, right? It could have kept going, but it didn't, and that's okay. We had a leap, which is okay, right? With the leap, I'm doing better at holding the leaps because we are determining the next sector rotation, or not really a sector rotation, the next hot band. So, but the reason why I called out next week's because I figured, you know what? Why call the weeklies when we can swing and capture a move like ASTS or RR or Path? Path is leading right now, right? It used to be RR a little bit, right? R came up, right? Look at this. We got in on the 27th on serve, right? Look at this. All robotics were moving that day. It came down with the rest, but look, RR kept them going way higher, right? And then it pulled back, and then it went even higher. And serve is not until today. So I said, you know what? We're gapping up. We're getting above Tuesday's high, and we're above the original gap start. It's gonna have a high probability of going up higher today. Boom. And it's safer with time too. So we get in and we start making money on the next week's already, right? And it's going almost to 50%. So really simple. You could have cut it like this, 24. Sorry, into fours. So like here and here. So 1, 2, 3, 4. Right? 25%, 50%, 75%. And if we go to the 3-minute, you can see how it had trouble at 25% area, right? Here, consolidated a little bit, and again here, look, 25%, right? It's crazy how the gaps, when you cut them into fours, right? It looks like a bull flex, so it looks like it's gonna gap up a little bit after hours tomorrow, so it's okay. We are still in the Jans, and we basically made free the next weeks. So 17s, they're free, and the 20s, I'm in some of those. Those are a little bit risky, because I am expecting for this to completely fill the gap within either tomorrow or Monday or Tuesday, and I should be in the money by $2, because the main gap fill is at 23, and I have the 20s. So that's that, and I got in 10 minutes after the bell. So it was got in at what time? 8:40. So that's gonna be here. Where is? Ah man, there we go. I mean, I do wear glasses, guys, so bear with me. Basically, on this red candle, I got it. So I had to make sure first, right? So it wasn't too long ago, too long after it gave me the confirmation, right? I needed to see that can't nobody close on the 3 above this, and I already know it's above the clouds, right? On the daily, you know, it's it's far away from the clouds right now. So eventually it's gonna go up, and what goes up vertically must come down eventually, or price is gonna catch up. So it's gonna go up, consolidate, and then the clouds are gonna get closer. Like for example here, right? It was too far apart, and this is something I can go over another day, but it's really nothing to really go over. You can clearly see that there's just too much of a gap, so it's gonna make a big cloud like this, or it's gonna consolidate like it did, right? Kind of consolidate, and then eventually it goes back inside, and then it goes over, or it rejected here. So this level is interesting of the cloud. So went above it, came down, went a little bit under, and then back up. So this is when it gets interesting, because this is when you know a move is gonna happen. All right. So, but I mainly look at it just to see if it's a change of trend. So which could be bullish or bearish. And you can see clearly here how we went up and we came down. Look, right? What goes up must come down. Tested the clouds. Boom. So now it's a big, gap, but we're not worried about that right now because they're already free. And if it does come back, that's on you. Letting a free trade that's over 100%, or that you could have made 100%, or whatever. If you're on the weeklies, go to 0. That's on you. But anyways, we go back to the 3. Body candle close on the 3. I go to the 5. But I already know this one's a high probable trade. So there's a doji here. I figure, you know what, it's gonna keep going, and it does. And we go green, pretty good. On serve, we went 30%, 16 minutes after. So like right here at 8:56, the TP almost right here. Yeah, from here to here, they were pumping the premiums on this one, so not bad. So
Why do
this
you
one
call it
worked
a
out.
doji again?
A doji, okay, I'm gonna go over the candles right now. I'm looking for hammers. I'm looking for those key reversal. I'm looking for the inside day, and I'm looking for a doji. A doji just means it doesn't know where it wants to go, but it is a doji right here. It doesn't mean it doesn't want. It means it doesn't know where it wants to go, higher or lower. But since I have pretty high conviction on serve, I figured that the next candle was gonna say it's gonna keep going higher, and it did. So it broke above it, and it just kept going up.
And what's the inside day indicator again?
I don't have an inside day indicator. I just look at it manually. So for example, on this day, right? So on this day, I had the inside day and a key reversal within that same day too. So we're gonna mark it here like this. So You have the high and the low, so this is the most important levels on this to trade, right? And your PT is gonna be the top of this wick and the low of this wick. So we're gonna do this. We're gonna mark this pink just for educational purposes. So this is your trigger, either go long or go short. Let's see what this high is, 1421. The low of this one is 1340. We have it on the money, and we don't really care about these. It's just gonna be education purposes. So we got a 3-minute on that. Okay. So on this day, we actually gapped up. That's where it opened, right here. That's where it opened. Where it opened. And this is where it closed. That's why it's like this. That's why I have it like this. So we immediately already are over the previous day's highs. And what I usually say when we gapping up, you want to see if we do have a pullback. This one was instant damn, I can't even say that. It was an instant pullback. So that you want to be careful on days like that, because you could have been like, oh, it's gonna go higher, but remember, it's so close to this PT already, so you want to be careful. I wouldn't have gone long, because remember, we got up on that day. I'll show you a better example, which is AMD is a better example. That one actually was way better. This one you could have waited to go short when it broke under here, or under the day's low, or the gap, or the closure, right? Because remember, earlier on Amazon, we showed you that same thing. All right, so let's see here if it worked out for the downside. So let's say the gap, right? Your entry is the gap when you lose the gap, right? The gap closure. So that's the level you want to watch to go either remain long or short. It closed the previous day at 13.75. Could be different on the daily. Remember, it does change a little bit by a few pennies. So let's look at the MACD as well. So we do have the MACD under the zero the whole time since here at 10:27. Since here, we still stay above. Right, we keep going. It already basically filled, so we don't really want that. We can leave the level here. Once we lose it on the 3-minute, look, can nobody close on the 3? On this one and this one. Here it kind of messed around, so you want to go to the 5. There it is. So on the 3 and on the 5. So on the 3 gave you earlier here, and on the 5, but look at the next one. It immediately went up. So you could have entered and remained short. You did go negative because it bounced on you, or you could have waited. You know, sometimes it's okay to wait. It's better to be late than early, in my opinion, because let's say you went in and it just keeps going up, back up, and it goes back to the either this open or the wick. Now you're really clapped on those puts, right? So, but you already know that price action is weak, right? You can see it clearly that it's having trouble. So once you get the other one right here on the 5-minute and 3, momentum actually starts to pick up here. So you could have entered on this candle, and look at the next one, boom, and then the next one, boom, lower. So that was a quick, fast scalp on the downside. So, or you could have even waited for the previous day's low to get taken out, which means it's a key reversal day, and that's exactly what happens. It keeps going lower for the next few days. So, but it did have a bounce here. Look, it did have a bounce, so this definitely would have spooked you. So that's why I like to mainly take my profit along the way, because let's say I do get a swing and my entry is kind of bad. This bounce right here, I mean, I don't know how negative I would have been, but I don't like going negative, right? And you shouldn't either. You shouldn't like going negative. You want to try to get as best of an entry. That way you can start getting 20, 30, 50% fast in and out. But it's got to have almost the same setup every time, right? As you can see, I've explained every time, every single trade I've called out that I've showed you with the screenshot of entry, why I got in, right? If it makes any sense. You'll get used to it, like, you know, but it just, you know, like I said, screen time is your friend. Hold on, guys. Let me reply real quick to some people real quick. Give me 1 second, guys. Okay. I was just replying to somebody if I was going to the gym or not. But what time is it? 8:46. Golly, it's almost 9 p.m. for me here. Damn. Time goes on by fast. But hopefully you're learning something, guys. It's almost the same setup as you could see. It's boring, right? It's boring, but it's the same thing over and over and over. All right. So, but yeah, we got above the original gap and the previous day's high on serve. So, and I can go over another day like the fibs, but right now it's like the simplest of simplest that I could possibly put it. Right, we're getting the levels from the wicks. Right, some levels from the bodies candles, but mainly it's usually the wicks. So you can color code those purple, or the gap is blue, baby blue for me, and I have neon green for the wicks, so it can stand out to me like, hey, that's an important level, you know. So, and it still looks good, still above the clouds. It's just consolidating. You know, tomorrow, what's going to be important is here, and now the gap is like this. So what you want to do now, since we already filled quite a bit of this, what you want to do is this. I'm gonna do this. Today's high, that's where the gap is, 1790, and I mean, you could keep this like that. That's about 50%, or you could change it, you know, to 50% there, right? So, like that, like so. But you don't have to. I mean, I already kind of visually can see where 50% is. So, and we do have a gap down below. So now that all these other previous levels, they don't really matter as much. What matters is the wick, and then this one doesn't matter. What matters is this one down here, and this one wick here. There's a little mini gap right here. So like that, and like that, into here, like that. So it's gonna see how it looks kind of funny. That's why I shaded in. So this one's gonna be up here, like that. I'm gonna shade this one here, like that. That's why I do that, because you could confuse yourself, like, oh, this is the gap, you know, like instead of this, it would be like that, you know, like that's the gap, and that's not correct. That's not correct, you know. So
Hey guys, how y'all doing? You see, I can't see the ticker. What ticker is that?
it's serve.
Okay.
It is serve.
You
So these
teaching the gap fill right now?
yeah, I'm talking about the gaps, the wicks, how I'm getting my levels, and why I'm getting in on the entries that I'm getting in, and why I'm taking those trades. So
Perfect.
And I did record it, so I'll post it on. I'll edit it and post it on my YouTube. Hopefully it's good. Hopefully you can hear me. Because if you can't and it didn't actually get my voice, that sucks. So.
You're
But
recording right now?
yes, I'm recording, so it's capturing whatever you say.
Okay, never mind.
All right. So is everybody kind of understanding so far? Kind of easy to follow? Yes? No? Don't be shy.
The only way is to test them, EC, to see if they capture what you said.
No, we
Have
did.
somebody,
We did test it
yeah,
before
somebody has,
we
yeah, they
recorded
have to
it.
re
Yeah, and it did capture, but if it stopped capturing, then that sucks. But we did test it, and it is recording.
No, I say test. You ask, does anybody have questions? The only way for you to know if they captured what you just taught is to ask them questions so they can regurgitate it back to you.
Yeah, but I mean, like, they've been following along. So,
Oh,
who's been
okay.
following along? They were asking questions earlier. Oh yeah,
Man, you
I
got
mean, I
me,
did
bro.
answer
I
them.
asked a bunch of questions.
Yeah.
Okay,
I
good.
kind of basically gave you like any question that you might have had. I kind of basically already gave you the answer as well.
Yeah, you did.
I'd like a quiz.
You'd like a quiz? Jeez, I'm kind of bad at
Yeah,
making
give me a quiz.
I did earlier today. Remember, I said what was the key level that we were
I
at?
know. I like the quizzes.
You do? Yeah, and you're doing good on those. You're answering them correctly. Let me think
Sarah,
of one. Oh, okay, here, let's go to AMD. Okay, what is this called right here?
inside day?
That's correct. Right? This was a better one than that serve one on that day. And also, what is this? Oh, this one didn't have a key reversal, but yeah, that is perfect. That's an inside day. So we're gonna do that real quick and show you what I mean by that and why some of these trades are some of the um, best trades that I've had as well. Some of them, right? So this the PT.
And you're looking on the daily time frame, correct?
Yes, I
To
always start.
identify this inside.
Yes, I
Okay.
always start off on the higher time frame, and sometimes you can't see it on the intraday, like the 1 hour, etc., like that. So we're gonna do this. These are the PTs that we want to go to. So the high of this is 226.71. We got it. The low is 203.01. Is it 203.01? It's pretty simple, guys. Like I just feel like it's boring for me to repeat this. So hopefully you
No.
like it. To 1890.
Nah, it's not boring, bro. It's reaffirmation to make sure it locks in the brain. So don't feel like you're repeating yourself too much.
So say for example, I wanted to trade this ticker, which is AMD, and I'm looking at it and I mark my levels on the daily time frame.
Yep.
Since the previous candle marked the potential high and low range of how much we can potentially go, I would take the breakout above or below that inside candle, correct?
Exactly. Yeah, and we're gonna see that on the 3 and the 5, and that's why I always say I trade off the 3 and the 5 because I'm gonna show you and prove you why it works so good right now on this. This is a perfect example. So we have our levels, right? We're waiting. You might think it's late on this move up, but no, look at this. You could have entered here already, you could have been already green, or you could have waited for the pullback. There's always some type of pullback. Eventually there will be one. And look at that. It held above it. So you could have got in here as long as it stayed above the previous day's highs. The next PT is the pink. And guess what? It actually did it on that same day. So there you go. Really easy. Really easy. So you could have got in already here. Look, it retested the clouds, right, as well. So that's why I usually have my clouds to see if it's a change of trend, but it's still slightly bullish, I guess, because we were already above them here. We just kind of hovered around too close. So on the 5 minute, it probably shows up better, right? Yeah. So see here, it's like really close, so it's still holding. On the 10 minute, which is the default, The clouds are meant to be traded. I believe, I could be wrong. I trade them on the 3 and the 5 and on the daily, but a lot of people say it's on the 10 minute. So, and we actually have a gap here, so we want to have this gap. Like that. So I'm just not gonna worry about it to be exact, because the main important level for me is gonna be the low of this, which is gonna be which I already have. So this one's gonna be important though. This low on this day, right? Because this is still a good scalp. This is from 209 to 204. That's a really good scalp. Let's say this gets filled on a Friday. That's you know, that's more than enough to make really good money, good return, right? But this was your entry. Look at the 10 minute, right? It still held it, and then it went boom. This is your profit take, your PT. Above it, you get lucky on the runners, right? And you did have a premium spike over this because it's breaking this, and it's making a new all-time high. And also keep in mind, this was the reason why I rejected here was because this is actually the all-time high. If I go back here on the weekly, you'll see what I mean. Excuse me. So the actual all-time high is 227.30. So whenever those news came out on the daily, and it, remember, as always, as I say, we gapped up, so you want to look for some downside. What happened on this one? It goes down, right? You've seen that a lot. Right, so you want to be careful. Let's say you were trying to chase this, you would have got clapped immediately. That's why it's better to give it time, and you could have got in on this day, on that break of this, and look, you say you're still holding, or you got some with time. It made a new all-time high, and then it made a new all-time high today. It's a doji. It's getting exhausted a little bit. It could keep going up. We don't know that, but it is breaking all-time high, so it could go higher tomorrow, or it could come back under it. If it's back under, it's bearish. If it's still above it, it still has a potential to keep going up higher. Simple, right? So for tomorrow, your entry for me, if I were to trade it, I would look for a break of this doji, because remember, the doji means it doesn't know what it wants to do. So like that would be my my entries. So I would get puts under this. My PT is gonna be this level. There's gonna be a lot of support around here. That's previous big levels high. This was a big level. It rejected instantly, and then that green one is the all-time high. So you know it could go down there and then bounce. Now if it starts to lose that, your PT could be as low as this. That would be insane on a Friday. If it were to give it all up, you know, a big red candle tomorrow all the way down to here, that would be insane. I'm talking about like a 3,000% plus. But we don't know if that's gonna happen, right? We just gotta wait. There's really no weakness.
Did you look at Meta? I was charting before I jumped on with you guys.
Yeah, Meta. We were already looking at it a long time ago, and we called the bottom on that. If you would have got in on the swing, and I'll go over that right now, and I'll show you how I was able to look at that, and also Netflix, me and Cosway. So, and there was a lot of flow coming in on Meta too. And I think Buddy Rowe was the only one who got in Meta. I think he did make some money. Maybe he got stopped out, or maybe he sold for a little bit of a loss, because after he got in, it did go down a little bit. But it was already showing some signs of possible strength on it.
Yep.
So that's AMD on that the 3 minute and the 5, and even on the 10. So you could have went. Normally, when you get the 3 and the 5 confirmation, you want to go work your way up to the 10, right? Because that's usually default. On the 10, you could have just rode it. If it's above the 20, then you're chilling, right? The safest way to trade is obviously getting at the money or in the money, but since we are, I guess, since we're okay, I guess, at trading, we'll get some a little bit further out. Not too far out. Well, me, I don't get too far out. So. Meta, right? Meta. All right. So
yes,
Meta.
sir.
Meta. Me and Sal was one of the ones that was paying attention to meta. He's actually been putting in a lot of the strategies that I use into play. We're gonna pretend this didn't exist on meta, because I was already watching meta before this happened. Before this happened, um, we're gonna start all over. Meta had a gap here. You know what? I'm gonna do it real fast, like this, because I do gotta go in a little bit. So we had a gap here. Why are these like this? Whoa. I do that. And yeah, I don't know why that's okay. So there, that's a gap, give or take. And then we had another gap here, right? And that's how I was able to snipe or gave the trade idea. Now, did kind of take a little bit of while to work out, but today was the day that you would have got the premiums spike, and you would have been taking profit today. Today was the day to take some profit because it's filling this gap. So it filled this gap. We were already looking at it since here, and then we said, you know what, you want to look at it for this other gap down here, the beginning here. So you could have gone long here, but it didn't quite work. It did a little bit, kind of faked you out, and then it went back up. But the best was here because this is a big gap right here, right? And it actually went
And
right here.
it bounced off the 50% too on the
Yeah,
gap.
exactly. You see that? That's
So
crazy.
just to
man.
reiterate what you're saying.
Yep, exactly. It had on the daily, it never closed under 50%. If it had, it probably would have gave a higher probability of keep going down and down all the way to this wick down here. Whoa, why is it like that? Oh yeah, I changed it. Let's go back to that, and we're gonna do it that way. That way it's vivid. There, and we also have another gap here. So
Sure. You see, I see the bottom of that gap, but the top of that gap, where's the top of that gap?
Right.
What level? Yeah, right there. Oh, never mind. I see it now. Never mind. I got it. You're good. The bottom of that green one.
yeah, sorry, I only drew it to make it faster, but I'll go ahead and so you can see it visually.
No, you're good. No, I see it now. Yeah, no, I see it now. You're good.
Okay. Yeah. Remember the wicks. The wicks. So, and this
I was
like
looking way to the left. I was looking at the top. I don't know why, but I was. Yeah. Cool.
Yeah. Hopefully y'all can see this too. Hopefully it's not like too small on y'all's screen. I will post it later. Maybe you can pause the video and zoom in. Hopefully the quality is good. It should be 720 plus.
When you do the gap, you always do it from the
close.
wick to the
Yeah.
to the open of the close or to the open
Remember
of the
the
red,
close.
right?
You want to get it from the close, because this is where it closed, and then it gapped up. Right? It gapped up to here. Actually gapped up all the way to here. So it was a really big gap. So every time it kept going lower and filling the gap, I've been changing it. But the original gap was like this, low key, like this, because on that day it closed like that, and you can see how it even acted at 50% too, right? So it went 50% here. Let's delete all of these numbers.
Hold on, I think I misunderstood. So like the red, you grabbed it at the close for the red, right? For the red candle.
Yes, because that's where it closed on that, right?
Right, and then you grabbed it at the top of the high
On
for
this day, and
or
then
rather
next
the
day when
bottom of the low rather for
Yeah.
the bullshit.
Yeah, but since it already have filled most of it, because this from this day to this day, it started filling a little bit. Because this was the open, right there. That was the open, and it went lower, so it filled it. So when it closed, so when the day was over, I did that, and then the next day it just went lower, right? It starts filling the gap, like I said, right? Once you see a big gap or any gap up or down, you want to go the opposite for the most time. That's why they say it's a gap and go or a gap and crap, right?
Nice.
So
Thanks.
so you can see how it even acted at 50% area, right? Can nobody close under it. It closed above it. What does it do? Bounces back up. But that was from the original, right? So the next time I had it like this, and then look, we went there, we went look 50% as well. Look, 50% bounced. So every time you're changing it, you want to keep in mind of that. So you can see how every time I change it, it's 50. So now it was from here, from there, because it went lower, right? That was the wick, and then it came down here on this day. It actually still held the beginning of the gap, which was right here. So after that low, and that was done and over with, I went ahead and changed it to this, and this is the most current one, like that. And that happened within the past week, since last week. So what's it, Wednesday? Yeah, so in 1 week it filled it down completely, and now it's recovering. It reclaimed this level. That's why I had a nice little pump, right? You know that that's going to be an important level. That's where the gap started, and that's a wick. That's how you know that key level is a big level, because it bounced tremendously from there, right? So to be exact on that, that is going to be a low of 721.24. Whoa. There we go. There we go. Like that. And you're going to see how important that level is on the 3 minute. So we were talking about meta. There was Flo coming in and said, hey, it's about 50%. You can look for a bounce. I think I was mentioning that on the live every now and then if you were listening in. And Buddy was the only one. I think he got in on here and it went up. And he's like, yeah, man, I got in. I was like, oh, damn, good shit. But then look at this day. If he kept on holding, oof, that's a premium kill. It actually wanted to keep going down, right? So that's why if you would have had like a leap, you're chilling. You're back maybe green a little bit. Or if you average down, you're really green. Or if you actually waited for the gap fill, right? There's always a better entry. And a hammer. And I did mention this, I think, and I said, hey, Meta is coming, Meta Flow's coming in, keeping on Meta. I even wrote it on main chat, I think. Let's see. Let me type in Meta on main chat. Let's see here. Yeah, at 10, I said Meta. Let's see here. Snap Meta. That was T-Raj. Let's see here. I said Meta on October 2nd, 50% gap fill Meta bounce yesterday, 708 or so. Nice bounce. Good if you got in for a possible swing. So we were keeping an eye on Meta. I think you mentioned Meta. You said Lotto play Meta. Oh, you said puts. Nice. Yeah, that worked out beautifully on October 1st. Did you get in? If it went, it would have worked out. For expiration, oh, I don't know what expiration you got in. It just says Lotto for 29 cents or $29 on October 1st. When was this? On this day. So it went up and then it went down. It took 2 days after. So I mean, if it was a Lotto and you held it, it would have worked because it was a Lotto. $100, you could have got 3 contracts, $90. Maybe you would have made 100% on the downside. So, but it actually had support, had a hammer candle. It actually held, right? And then boom, to date it was the actual break. So, and let's go to the 3 minute. You can see here at the open, it went to, remember that key level, that wick. Once it had a candle body close, 721.24, right here, it closed at 721.29. Next candle, massive green. You can go to the 5. Also, candle body close on the 5. What does it do? From then on out, nothing but upside, consolidates, and then it keeps continuing up. There's the volume validating it, right? It's picking up. There's still buyers. It goes down a little bit on low volume, but that's the 5. But the 3 is mainly better. It's still here. Let's go to the 3. Let's see what that looks like. Yeah, still looks good. It goes down a little bit on low volume. Sellers are not really. This one might be interesting, but overall, you see nothing but green, right? It's buyers in control today. This confirms it. This confirms it. This confirms it. This confirms it. What does it do from this level? Remember, the wicks are important. What does it do there? Rips. You see? And the MACD is still above the 0. Right here, let's see here. So it was already above the 0 since here. It was still holding the clouds on the shorter time frames. The MACD is still above the 0, so you're Gucci. And there's no bearish divergence until here. There's a little bit of bearish divergence. it's kind of going with the price. It could have gone lower if it went under the zero, but it didn't. It actually crossed, went up. It's going higher now. It's an actual bullish divergence. You see that? So bearish divergence. Sorry, I meant bearish divergence. So, and by that I mean price is still going up, and the MACD is, even though price went higher, the MACD is this down. So we want to be careful on Meta, right? There's some days that it's going to be a red candle, or it could be another. It could be a small pullback back to the zero. All right, like tomorrow, let's say it goes down and retest. Oh, let's say tomorrow it goes down, retest here. The MACD is at the zero. You could look for a bounce at this level tomorrow on 0 DTE. Okay. But yeah, Meta. We were watching it, and really good action on it. And Netflix, same thing with Meta. They were kind of weak as well. So when the market is weak, the money went into these, right? It makes sense, right? So, but it's filling the gap. So that's your PT, right? So this is what you should have had already on your TA. Well, if you trade like I do. So this high is 731. 731. Boom. And then the close 734.38. There we go. And you can go look at it on the 3 to see how it's acting there. So it reclaimed, look, it went there, rejected, right? Once it actually closed, went to 50%, had trouble, rejects, comes down to retest, no candle, but it closed under. There's a hammer, also still above the 20, goes back up, gets over the 50, goes 75%, then comes right back down to 25%, and goes up. All right, you see that? It's such a beauty, man. Gaps are so beautiful. I don't know why people hate on them, but as you can see, they're pretty decent strategy. Any questions? And I think that's it. I mean, pretty easy stuff once you get used to it, in my opinion. It all comes down to psychology. You know, as obviously you can always get a lot of time, and you're probably gonna win a lot more, but it has to make sense, right? So, any questions? Nothing?
When does the premiums come into play? Like when you're looking at specifically premium, I know it's like an advanced topic, but
Yeah.
I'm just curious, like when
Well,
you
for
actually
example,
put that into play.
I would have looked at some weeklies if I was paying attention to Meta. Literally, if I was focused on Meta, I would have took some weeklies because, and not too far out, I would have took maybe the 725s or the 730s, because it has the high probability of going to that gap today, and it did. It went to the gap start, and then it filled it. So I would have got some weeklies for a quick scout instead of getting time. Because remember, we were already looking at it for a while, like, oh, it filled the gap completely. It reclaimed the beginning of the big gap, right? That started way back here. You can see how crazy this level is. I mean, it's just crazy, right? As soon as it opened, goes down and wicks to it and just immediately gets bought up. So you know this level is an insane level. And it's a different level here for some reason. Like I said, on the daily, it gives me that. Let's go to the daily again. It does that, I don't know why. So this daily bottom is 721.24, but if I go on the 5 minute or the 3, it's going to be different by a few pennies. I don't know why it does that, but maybe there's an explanation. Like I said, I'm no professional, but the low of this one is 721.42. Wow, that's a big difference. How much of a difference that is. I'm too lazy to use my brain right now. We're gonna do the simple, easy way. Oh. 18 pennies or so. That's actually pretty big difference. Usually it's like less than 5 pennies, but that's like I said, I don't know why it does that. But I like the daily, as you can see here, on the daily. But even on the 3, it still would have worked 721.42. Well, yeah. So you see why the daily is better? Because look on this. Let me delete this. The 3 gave you on the daily, and the next one's green. So let's say you would have waited for this body candle close, and then for a red candle, you could have done that. Yes, you could have. But as soon as you send this, you could have gone in already as well.
Fantastic. I don't think I can think of any other questions for me personally. Does anyone
Yeah.
else have questions?
Yeah, I think I did pretty like showed you exactly pretty much any questions you might have. I might have answered. Like I would have got like the 725s or the 730s depending on how expensive as well. And yeah, let's see actually how expensive they were. Let's see. Wow, it's up after hours too. Not bad. 730s were probably yeah, so I would have gone with the 730s because they probably would have been worth like 300 if I would have looked at it. I mean, maybe at the bottom here. Let's look at them. When they gave you the trigger to go long, at what time? 10:18. And remember, the premiums do have a chart of their own, so you could have entered long above 380. That's pretty expensive, but Meta, I thought Meta was a little bit cheaper. It's been a while since we've traded Meta, huh? Crazy Cow. They used to be super cheap. I know on Fridays everything's cheap, but gosh, they are 10:18 here. Okay, so that's gonna be here, 10:18. Yeah, 300. Wow, right on the money. I said they were probably gonna be worth around 300. Not bad for guessing that one. So that's still not bad because let's say you would have got at least one contract. I mean, 20% of 300 is still pretty decent scalp. Or 50% is 150 bucks. Some people make 200 a day working 8-12 hours. So it's not bad on one contract. It had a support here.
And those premiums later in the day, what did they go to? They went to what, 500-600?
680. They went. The highest was 700.
Yeah, so at least 100.
100%,
Wow.
yeah. So, but look at this entry right here. From this entry, you would have been instantly up consistently. They went to 535. So.
Yeah, so you think, like your levels, you think you might be late to the entry, but to confirm the body close on the 3 and the 5, you're actually not. I mean, you might have saved $50 on the premium if you would have got in early, but there's no guarantee.
Yeah.
You're just like at the casino at that point. So once it closes and confirms it, then boom.
You can still get good money out of it. That's why I'm usually patient. So.
Yeah.
And you can see it clearly on the premiums too, right? Like you said. So, I mean, yeah, you could have got in like way earlier in the day, but what if it never went back up and you're just back holding? Look, let's say you got in at the open, and it sold off on you. You're negative, and it never goes back over. It goes up a little bit, but you probably break even, and then it reverses on you, and now you're back to red. So, this would have been my entry because of that previous gap start. That was the gap start. 721.24 on the daily. So, and you can see here on the premiums. When you can see here when I move my my little hand, my cursor, you can see the entry. You see it on both charts? Y'all see it? Look, I'll circle it here. You see that? The little dotted lines, the little white lines. You see the premium spike?
Yep, I'm seeing it right there. Yep,
Yeah.
on both sides.
Yeah. So you see how the price made a new high a day on here, but the premiums didn't? But you did still get a premium spike, right? This is the premium spike right here. This is the premium spike. This is the day's high break. You see what I mean on the premium's gonna spike over the day's high? That's the perfect example on the premium right there, where I circled it. So it broke the day's highs and they reclaimed the previous gap start, and that was a premium spike visually on the premiums, right? And then the premiums, once it kept going higher, it made a new high like way later, right here, here. So look how much it took for the premiums to make another high. This is completely different than ARM, right? So that's why you want to be a little careful on some, because in the previous days you could clearly see it that it wasn't giving you that push. Remember earlier, like it did give you this nice, but look, 2 days. That's why I said, that's why I usually wait, because for that's a perfect example right there. Because let's say you did get in, but it like I said, it doesn't go higher. The premium is not helping you. You get what I'm saying? If it makes any sense. Let's say if the premiums on that time, it actually went all the way up here, you know, then that would have been insane. You know, you should be like, it's a really good trade. You know, you should be like, definitely take some profits and stuff, or you know, give yourself a pat on the back for catching that really good trade, right? But it didn't. It until later on the premium started making new highs, but Meta had to, you know, really keep pushing. So, but it was a little weak. I mean, you could see here, right? Had a little bit of trouble, and then look at this candle, went back under, so you know it's gonna have trouble. Look, for 3 days it had trouble reclaiming this level. 721.24. But once it did, it was still a good entry. The premiums were still low. You could have got in here and take it to the day's highs of the premium. So let's say you got in at 300 and you took it almost 400. That's $100. That's not bad. That is not bad. Remember, you can't be greedy. You want to take money. If you want to be consistent, or if you want to do it like a real job, you gotta take money. You know, you have to. Who cares if you're not making 1,000% or even 100% or even 50%? They will happen. It will happen. That's a guarantee that it will happen. I guarantee you. I'm not financial advice, but I guarantee you that it will happen. You will hit 50%ers and 100%ers. They will come on runners. Maybe fast on your full position, maybe, but it will happen. The probability of that happening is pretty high. So, well, hopefully you like the lesson, guys.
You see,
Yeah.
will you switch to Okta, please, on the daily, and
Which
just go over Okta for a minute?
Yeah.
It had an inside day the day before yesterday, or yesterday, I should say.
Yeah. Give me 1 second. Let me go ahead and
And
delete this. Okay. And looks like I have some TA already a little bit. Nice. Consolidation, bullish divergence. You see how fast I spotted that already? We're gonna start all over and see what the potential on this one, because it does look like it has potential for a move up. You can clearly see the bullish divergence as price consolidates. bullish divergence right here. It's getting above the 0, and it's in a consolidation. So that's 2 things already, right? If it's getting above the daily clouds, that's a change of trend. That would be 3 things. If it reclaims this wick right here, that's going to be your most important level for now. That would be 4 things. So as long as it has a few of those, you can get a leap on this one. It is pretty close to the bottom. As soon as you start seeing the break of maybe here, you want to be cautious. But the real short would be under this wick right here, 87.24. So like that, and the high of this, it would be my entry, 96.37. 96.37, high 96.37. Did I say 9.6 or 8.6? 9.6. Wow, that's pretty huge difference. Whoa, did y'all not see me click on it? I did click on it, didn't I? There we go. 96.37. That happened to me earlier.
Yeah.
I could have sworn I clicked on it, but oh well.
Has a nice big gap above.
Yeah, we're gonna get to the rest of the TA here. Let's see here. So the next one would be
Thank
here.
you.
So this is the next one, 98.87. Okay, and then we have okay, this one's gonna be important, and we're gonna get to the gap. So this is gonna be a little bit important, and this one. So for this, we're gonna do this. I'm gonna do that. High of this one is 107.84. But this is the main, one of the main PTs. The high of this one is gonna be 112.08. It's the gap. Start. That's the wick, and then this is the close on the previous day of that date. The close of that is 125.50. And you can shade it in if you want. That's what your TA should look like, Sarah, right now. There's gonna be a little bit of fuckery there. I'm about to bleep that out to make it friendly. Let's not make it too dark. There we go. This one's gonna be. There we go, like that.
And as far as how you mark your triggers, you just put alert on the high of that wick there.
So for me on TradingView, I would do this.
If any interest, then you'll have the alert turned on, and you don't even mark it like go long or look at.
Nope, I don't.
No, okay.
Because
you just know.
Yeah, I just because it could hit that trigger, but it could reverse. You know what I mean? I just got the alert just to go look at it, and I remember like, oh, this one looked nice, right? Like some of the triggers that got hit today was like PLTR. Let's see here. We had Amazon. We had Oracle. Early on in the day, we have LAES that got hit. VST that got hit. Remember, I think I mentioned that to you. I said, hey, your VST alert. So, you know, and then it's up to you to take whatever you like, you know. But that's how I would see it. Just because it's too much of consolidation. But I do like the setup on it. Bullish divergence, consolidation, and then a little bit more advanced. I can go over another day. We look at
yeah, thank you so much for everything.
Yep, and
Appreciate
we look
it.
at it right here. See where we're at.
Yeah, so you wouldn't get on a like a 0 DTE on a Friday until it went over that consolidation level. You wouldn't your trigger. You wouldn't even look at it.
Yeah, I wouldn't even look at it, to be honest, unless I'm like paying attention to it like almost every day. Then yeah, it's worth it to maybe go in. And another thing I do notice as well on here is that it had an inside day and it broke out today. It almost looks like it had a key reversal, but it not quite. I don't know if y'all see that. I'm pretty sure you noticed that, Sarah. I'm surprised you didn't ask about it. But
no, I did. I was just gonna wait for you to get to it.
Okay. So this is your PTs, right? Remember, we're gonna do color it like this, and this is your trigger to go long, and this is your trigger to go short. It almost went below. That would have been a key reversal, so that would have been really nice possible start movement.
When it made that teeny tiny doji day.
This one right here.
Is that the one you're talking about?
On this one.
Oh.
Yesterday. So today was the most important day. So it gave you the trigger long at 93.31, and we're gonna look at it on how it looks on the 3.
So, let's see. Monday, the October the 6th, wasn't the one you're talking about?
No. The key revert.
Because that one went above and below the previous day.
Yeah. But remember, just because it has that, because remember on SPY, it's been having it. Remember, SPY had it.
No, it can happen over and over again until it
Yes.
kind of weakens it and weakens it more.
So you wanna normally it does work like immediately. We've seen it countless times, right? We have given you the example on QUBT, RGTI, right? You've mentioned it on those. You've caught them, and what happens? They actually have continuation, or they have follow through, I should say.
Yeah, ARQQ.
Yep. So, but in this case, it didn't have no follow through, no nothing.
No, it did a retest, and maybe it's gonna follow through.
So you could actually get in on a long over today's high, or actually above this one right here. This would be the trigger 9458. So I would have it at 9458 and go in, or I could already get in because remember it is a Friday. You could do a lotto in anticipation. It actually breaks if you're already in, and it does go. You're biased because you're at this point you're biased. Right, you're not waiting for confirmation. You're nothing. You're just kind of going in like a 50-50 chance, right? We don't want to do that though, right? In order for you to make consistent trades and high probable trades, where you have a high probability of making money, you want to wait for those triggers, right? Or you can go in and anticipate it, but you want to be consistent, right? So that would be my advice, not financial advice, not real financial advice. I'm not professional. So, but hopefully that answered your question, Crazy Cow. I mean, it could go here. That's a nice move. That's a $3 move on 0 DT on Friday. Shit.
On a Friday,
On Friday? Yeah. So, but it did.
Yeah, just looking at the premiums, they're not that expensive either. So it'd be something. Yeah. So.
Yeah, and as you can see, it had trouble here at the trigger. So as soon as it went there at the open today, it sold off. Then it hovered there, had a little bull flag. Volume is there though. Y'all see that volume? You see how vivid volume is on the 3? It probably shows up just like that, but better on Thinkorswim. So it was telling you. So remember, bullish divergence, double bottom, or a little falling thingy, falling wedge, or whatever you want to call it, falling channel. I think this is what they call it. Bullish divergence. Buyers, more buyers, goes up, change of trend, keeps going up, confirms it with volume here. Oh. That volume, boom, up, more volume. That's a premium spike, bull flag break, or whatever, and then it comes back down to the clouds. It's been literally likes to kind of hug the clouds quite a bit. Like right here, hugged them, right here, and then right here, right here hugged it a little bit, right here hugged it, So that's why I use the clouds to see, like change of trend and yeah. But you don't really need it. You just want to see like, oh, it is a change of trend, so you could get it off. And then you just trade the moving averages or whatever. So, but volume is there. So, but this would be the trigger, unless it's already gapping up, because from here to here is a nice move still. Let's see what move this is. $2 move on a 0 DT on Friday. That's not bad. And if you do get lucky and it starts to break the trigger to actually go long on a Friday. The $4 move. That's pretty good return, I'd say. So let's actually go look at the premiums just to for fun before I leave. This is the last thing I'm gonna do. Because it is 9:35 p.m. God, this is gonna be a long video on YouTube, huh? God, y'all are gonna fall asleep if I upload it. You're probably not even gonna follow the whole video. Nah, just kidding.
It's a banger.
Let's see here, Octa. It's pretty simple though, right? It seems like, I don't know. To me, it seems pretty simple. Like I don't know. Hopefully, I do like it. Hopefully, it's not, you know, like I said. Can I start over? That's crazy.
Yeah, can you start over, bro?
Oh I really, you fell asleep until I woke you up? That's crazy.
Thank you, man. That was actually really educational. I learned like a shit ton through that whole process.
Yeah,
Like basically, yeah, definitely. Was that Stevie Wonder meme, bro? I've been wearing glasses forever.
let's look at zero DTEs. What price is it at right now? Let's go look at the 93s in the monies. Oh yikes! Can't even really see it on the 3. But you know what? In order to fix this, I do this. I go to Hekinashi, and there you go. Now you can actually see it better. So there you go. Or you could do this, bars. Oh, never mind. I thought it would show up good. Never mind. That shows up garbage. Hekinashi is usually my go-to because you can clearly see it visually. So I mean, they're gonna be way cheaper tomorrow. Maybe like $50, $70. Maybe the 90. Let's go to a different strike. Let's go to that. Let's go to 95.
Yeah, I was looking at the 95s. They're gonna be like $30 tomorrow morning.
Oh yeah. It's interesting for sure because this is today and yesterday. It went to yesterday's highs. Let's see why. Oh, because it broke yesterday's highs. Duh. But I'm gonna put a trigger on this. And yes, you can put triggers on the price of options. If you didn't know, now you know. Yeah, I mean you can put triggers pretty much on anything. Same thing on Thinkorswim. So if I were to pull it up here, I would go to Octa. You know, I pull it up on my charts, or on my chart. I go to the, what are we looking at, the 95s?
And the crazy thing is early in the morning, if it starts to move, you could even get those 98s, the algo. And I mean, that'd be a crazy move. But if it starts to get some movement, those premiums are going to move quick. You just got to get in and out, though.
Yeah.
But yeah, that's way out the money.
Yeah.
But yeah. But those would be crazy lottos if it does fill that up to that price target, that gap right there. You'd be
458.
Mm-hmm.
Yeah, you see how on the daily it looks kind of cluttered, the levels, but once you go on the smaller time frames, they're pretty good prices. It's kind of far, you know what I'm saying? Like it's really good, especially like on based on the delta and on a Friday. If you go to the 3, right? These is pretty good price targets. They're not bad at all. These price targets are really good. See how they don't look as bad, but on the daily, if you go, you know they look kind of bad. So this from here to here though, that's the crazy move right here. There, because remember this one is not as important. But it
Yeah, I think on an average day, it moves anywhere from what, like $1.50 to $2 max. I think I was looking on an average day.
Let's see here. I moved $3.50 today. On this
So
day,
yeah.
on this day moved over 3. Yesterday moved $2.30. On this day moved 3. So you could say on average 3. The low would be 2. So it moves between 2 to 3, which isn't bad. So based on that, you could choose a strike as well. By the way, if you didn't know, that's another based on the weeklies, but that's pretty simple, right? It's a given. You want to look at the average it moves. So you could definitely choose strikes based on how much it moves intraday, from the low to the high, not from the previous high or the close. It has to be from the low of that day to the high of that day. That's how you get your average movement on those tickers. Yeah, not bad on this one. The move on this one, it actually
Yeah.
moves. It could move. Let's see what the range of this is.
Yeah, the 95s would be perfect. You could
Yeah.
be like $2 in the money, maybe.
Mm-hmm.
I expect a post crazy cow tomorrow.
Yeah. Yeah, man.
I
I'll be
expect you to
keeping an
use
eye
your
on it.
channel tomorrow, bro.
Uh,
Yeah,
If
but
you
no,
don't,
I like it for a leap on it, for sure.
I'm gonna make a song about you, bro. If you don't,
oh, great.
Oh, God. Oh, no, I had it on 3, and I had this all, and I think I had. What did I have on here? I think I had. Dang, I already forgot what I had on here. Oh, we be on the 3, and we need to get it on the candles. There we go. I have Meta here. What did I have on here? Oh, I think Amazon. I think. I can't remember. But on this one, you know what? I'm gonna look at Mobileye real quick. Okay. Yeah, you see how Mobileye just moves too slow? That's why you want to leap on it. I was looking at it here, then it went down. I was looking at it here, then it went down. And that's why I've been holding back on calling this trade because of this 2 times. And then look, it gave me the trigger to go long. Then it came back down. Then it went again. It went up again, and then it went back down to the. It's just the garbage action. But I know that this before has produced 1,000% on the weeklies though. But man. All right, I'm gonna stop recording, and that's it, guys. Hopefully you learned. Let's see how long this video was. Jesus.